Very good morning, everyone. How are you all? Everyone fine. Now, last class we were doing India's 37. Almost completed. Some points are left. Let us complete that topic first. Correct. But before that, any doubt in any concepts? No doubt. So, can I say we have almost completed India's 37 to the extent it is concerned with the definition and measurement? Definition you have understood, measurement you have understood, then we have taken four special point. First is about what? Reimbursement have you understood? So reimbursement, I hope you have understood that whenever expenditure is required to settle any obligation which is expected to be reimbursed by other party, then if that reimbursement is virtually certain, then we should recognize as separate reimbursement asset. As separate reimbursement asset. When I say separate reimbursement asset, it means separately from provision, means it should not be set off with the amount of provision in balance sheet. However, in SOPL, net amount will be shown as a expense. Net amount means the amount of provision less reimbursement asset. That net amount will be shown as an expense in SOPL. And in any case, the amount of reimbursement asset should not exceed the amount of provision. However, if it is not virtually certain, but if it is probable, then it should be disclosed as a contingent asset. Contingent asset. Reimbursement means inflow. Inflow means contingent asset. If it is not probable, then no treatment. Then future operating loss, we have understood that for future operating loss, because it is based on future event, therefore it will not be considered in this chapter, and no provision will be recognized for such future operating losses. Then we have the executory contract. We have understood that Ind AS 37 is not applicable to executory contract unless it is onerous. What is the meaning of onerous contract? Onerous contract are those executory contract in which unavoidable cost of meeting the obligation exceed the economic benefit expected from such contract. In that case, the contract will become onerous. So what Ind AS 37 says, that we should create provision for unavoidable cost. Unavoidable cost will be lower of point number A, cost of fulfilling the contract, and penalty payable to exit from the contract. When I say cost for fulfilling the contract, what does it mean? Write down. Cost of fulfilling the contract comprise of point number A, any incremental cost of fulfilling the contract. Incremental cost of fulfilling the contract. Understood? Means, can I say what is the meaning of incremental cost? Incremental cost means what? The incremental cost means when we do some contract, whatever cost is incurred only for fulfilling that contract will be known as what? Incremental cost. Means there are some costs which will be incurred even though you are not fulfilling that contract, then that is not incremental cost. Are you able to understand? Correct. So only those costs which has been incurred to fulfill that contract, that will be known as incremental cost. For example, direct labor, direct material, etc. And it will also include allocation of other costs which are directly related to the contract. Allocation of other costs which are directly related to the contract. Understood? Have you understood? Have you understood this point? Right. For this particular topic, one question has been inserted by ICI recently. So now it become very important. However, it was important before that also, but now from my point of view, it has become very important. Question is expected in exam. Let us take that question. Come to question number 37. Very simple question, but a question designed in such a way that if you don't know the concept, you will not be able to answer it. Correct? Let us understand. HBCL manufacture heavy equipment for construction industry An order for supply of 90 equipment was received from ABIL. A contract was received. The unit price of the equipment was agreed at 190 lakh. Question 37. Correct? Unit price means it is sale price. Okay. 64 equipment was supplied during the year 2001-2002. Means out of 90, how much supplied? How much left? 26. And the balance quantity remaining to be supplied as on 31st March 2002. HBCL has 5 equipment in its inventory as on 31st March 2002. Means out of 26, 5 is already manufactured. Correct? HBCL considered that a contract was an onerous contract. It is given that it is an onerous contract. Means we are not supposed to now prove it. Already given it is an onerous contract. And therefore the net realizable value of inventory has been taken as the value of inventory as on 31st March 2002. So what they are saying, the NRV of the inventory is the value of the inventory. Okay. The management of HBCL contain the cost incurred toward admin overhead, finance charges and R&D expense, sales overhead and headquarter expenditure, etc. are considered as period cost and hence not considered for creation of provision. Correct only, because these are not incremental costs. Can I say this will be incurred even though the contract is not fulfilled? Therefore, these are not incremental costs. Therefore, can I say when you are creating provision, you are not supposed to consider such cost. Already given in the question only. I said a very simple question, but once you read and once you can't relate this question with the concept, you will be not able to write it. Right now we have done this concept, it become very easy question, but in exam the same question can be difficult because you need to relate the point with onerous contract. Are you getting what I am saying? And the same have not been included in the computation of unavoidable cost. Thank you very much. Thank you very much. Now they have given the question only. The management of HBCL has submitted the details of costs that have been considered for the creation of provision towards onerous contract. Material cost, can I say direct material will be included? Correct. Labor cost and factory overhead, of course it will be also included. Material overhead includes salaries and other expenses booked under department linked with the material like purchase, stores and quality control. So can these overhead are directly related to the contract, therefore this will be also included. This will be also included. They have given only. Thank you very much. Accordingly, the provision has been made considering the above cost only. The value of provision created for 21. How 21 came? 26 minus 5 is equal to what? 21. Remaining equipment to be provided as per the working shown below. The cost of production, which include material cost, labor cost, factory overhead and material overhead, is 199. Selling price they have given 190. Correct? It means once you produce, you can sell it at rupees 190 only, but the cost is how much? 199. So what is the unavoidable cost? Can I say it means 9 become what? Cost of fulfilling the contract. Cost of fulfilling the contract. Differential cost per equipment. Correct? Differential cost per equipment is 9. Differential cost of 9. So 9 into 21 is how much? 9 into 21 is 189. This is also given. 9 into 21, it is given 189. Whether the company's accounting treatment for the cost of creation of provision towards onerous contract is in line with the provision of Ind AS 37. Only they have asked whether the treatment is in line with the provision given under Ind AS 37. Means only write down the theoretical portion. If you can't write in exam, you can't analyze it, they will not give marks. If you say yes, it is yes, everything is correct, they will not give any marks. So how they have written the answer? Let's see. First, they have defined onerous contract. As per Ind AS 37, onerous contract is a contract in which unavoidable cost of meeting the obligation under the contract exceed the economic benefit expected to be received under it. Correct? Understood now? Then you can see this point, if you can see, come to this para. As per Ind AS 37, the cost of fulfilling the contract comprise the costs that relate directly to the contract. Cost of fulfilling the contract are the costs that relate directly to the contract. For example, it will include the incremental cost of fulfilling the contract. It will also include an allocation of other costs that relate directly to the contract. Simple. The unavoidable cost, if you want to write down, you can write down this also. Unavoidable cost will include any directly variable with the unavoidable costs are directly variable with the contract and therefore incremental to the performance of the contract. Do not include allocated or share cost that will be incurred even though the contract is not fulfilled, and cannot be avoided by entity's future actions, which cannot be avoided are unavoidable cost. Correct now. Accordingly, HBCL has correctly measured the cost of creation of provision for onerous contract by considering these, and these. Further, HBCL is correct that period cost will not be considered for measurement of cost for the purpose of creation of provision on onerous contract, as they do not relate directly to the fulfilling the contract. Same thing is entire solution is given in the question only, but how you are writing, on that basis you will get marks. Correct. So this is super expected question, right? Very important. Same to same question can be asked in exam. Understood? Any doubt? No doubt? Correct. Come to one more question. Question number, I have done that question, I think. This question 30 already I have given one example in the class only related to question 30. Example I have taken, so you can do question 30 by your own. Do question 30 by your own. Correct? Yes, sir. Now, after executive contract, what we have done? We have done reimbursement. Sorry, restructuring. We have come to restructuring. Restructuring we have done, but we have not completed. So what is the meaning of restructuring? Restructuring is a program which materially changes the scope of the business. For example, sale of a division, termination of a division, or relocation of one location to another location, or closing down of one location. These are some example of restructuring. Whenever there is a restructuring, the question arises, should we create, means whenever we have taken a decision for restructuring, so should we create a provision for restructuring cost? What India's 37 says that if all the conditions are satisfied for recognition of provision, we should recognize provision. Correct. However, can you say on reporting date there should be constructive obligation for restructuring? Correct. So how will identify that there is a constructive obligation? When two conditions are satisfied. What are the two conditions? First, entity has a detailed formal plan for restructuring, and entity has started to implement such plan or has announced the main features of such plans to the person who are affected by such restructuring. If these two conditions are satisfied, it means there is a constructive obligation on reporting date. Hence, we should create a provision for restructuring cost. Right. Now, how to measure the amount of provision? Same thing, can I say the amount of provision should be the best estimate. The amount of provision should be the best estimate, but it should include what they are saying. A restructuring provision should include only the direct expenditure arising from restructuring, means only it will include the direct expenditure which will arise from restructuring. Correct. Which are those that are both necessary entailed by restructuring, which is only because of restructuring, and it will not include any ongoing expenditure of the entity. Means any ongoing expenditure means which will be incurred even though restructuring has not taken place. So any ongoing activity should not be considered for determining the provision for restructuring cost. Understood? Correct. Have you understood this point? A restructuring provision does not include such cost as retraining or relocating continuing staff. Means any training of staff or any means relocation of staff. Can you say it will be dependent on future conduct of business? Any training of employee or relocation of staff will depend upon future conduct of business. So any obligation which is dependent on future conduct of business should not be taken into consideration for creating what? Provision. So this cost will not be included. Correct. Any marketing expenditure will also depend upon future conduct of business. So these are not directly related to restructuring. Correct. And any investment in new system, means if you are changing your method of production, so any investment in new method of production will also not be considered for creating provision for restructuring. Why? because these expenditure relate to the future conduct of business. Understood? Correct. Then any future operating loss up to the date of restructuring, means up to the date of actual restructuring, that should not be also taken into consideration, because future operating loss is based on future event. Correct. So future operating loss up to the date of restructuring are not included in provision unless they relate to onerous contract. Unless that the contract become onerous, then we can consider the future operating loss. Understood? Correct. To understand this entire thing, let us take one example which will help you to understand the topic. Come to question number 28. Question number 28. U Limited is a large conglomerate with a number of subsidiaries. It is preparing consolidated financial statement as on 31st March 2018 as per the notified Ind AS. Can you see these all Ind AS will be also applicable to CFS? Correct now, as well as to standalone financial statement. So when you are applying a respective Ind AS to CFS, so you will consider entire entity as one entity, entire group entity as one entity. Understood? But Ind AS 37 will be applicable to both consolidated financial statement as well as to standalone financial statement. Understood? Yes, sir. The financial statement are due to be authorized for issue on 15th May 2018. Means can you say we need to also, because whenever they have given the authorization date, it means AS4 is applicable. AS4 is nothing but Ind AS 10. So Ind AS 10 is also applicable in event occurring after reporting date. Now, of course, you know AS4. So it means you know Ind AS 10. So we can consider this point. Bolna yes or no? What is the date of approval? 15 May 2018. It is seeking your assistance for some transactions that have taken place in some of its subsidiaries during the year. G Limited is a wholly owned subsidiary of U Limited engaged in the management consultancy services. On 31st Jan 2018, on 31st Jan 2018, last class I have said that whenever the question is given in para format with lot of date, you start preparing timeline, otherwise it is not easy to understand. Correct? So if you are preparing, okay. If you are not preparing, then also you should prepare it. Okay? Correct? Okay. So 31st Jan 2018 given. The board of directors of U Limited decided to discontinue the business of G Limited. So it become a point of restructuring. So the board of directors have decided on 31st Jan 2018 to discontinue the business. Got it? From 30th April 2018, this is the date of actual discontinuation. They made a public announcement of their decision on 15th Feb 2018. Public announcement was done on 15th Feb 2018. G Limited does not have many assets or liability, and it is estimated that the outstanding trade receivable and payable would be settled by 31st May 2018. Can you say the settlement of receivable or payable is an ongoing activities? Settlement of receivable or payable is an ongoing activities. So can you say this transaction should not be considered to create provision for restructuring? Means suppose if you are getting less amount for settlement of debtor, so there is a loss. Should we create a provision for that? No. Are you able to understand what I am saying? U Limited would collect any amount still owed by G Limited customer after 31st May 2018. Can you see this point is not at all relevant? This point is not at all relevant. They have offered the employee of G Limited termination payment or alternative employment opportunities. If they have given two options to the employee, either you take termination payment or you can be given an alternative employment opportunities in the same group. Following are some of the details relating to G Limited. On the date of public announcement, it is estimated by G Limited that it would have to pay 540 lakh as termination payment to employee, and the cost for relocation of employee who would remain with the group would be 60 lakh. So on the date of public announcement, some estimation has been done. The actual termination payment totaling rupees 520 lakh would be made in full on 15 May 2018. 15 May 2018 is the date of what? 15 May 2018 is the date of authorization. So on that date, actual termination payment was made amounting to rupees 520 lakh. As per latest estimate made on 15 May 2018, the total relocation cost is 63 lakh. Understood? G Limited has taken a property on operating lease. G Limited has taken a property on operating lease. Correct? But this point is now no more relevant. Why it is no more relevant? You will automatically understand when we'll do Ind AS 116. Correct? You can delete this point. Understood? Means previously there was Ind AS 17 which was deleted and a new Ind AS was introduced for lease, that is Ind AS 116. With the introduction of Ind AS 116, this para become irrelevant. Correct? Means it was based on Ind AS 17. Are you able to understand? But Ind AS 17 is no more. So this para become irrelevant. Therefore, I am deleting this para. Understood? Automatically you understand, means when you will do Ind AS 116, you will able to understand why this para is now no more relevant. But right now we will not discuss that point. Okay? Chalega? Then loss after tax of G Limited for the year ended 31st March 2018 was 400 lakh. G Limited made a future operating loss totaling rupees 60 lakh till 38 April 2018, means there was some future operating loss also. How should U Limited present a decision to discontinue the business of G Limited in consolidated statement of comprehensive income as per Ind AS? Correct. You can see what they have written. How the U Limited will present a decision to discontinue in consolidated statement of comprehensive income. Statement of comprehensive income is used internationally. In India, we call it statement of profit and loss. Means this question has been taken from international book, but ICA has not modified it. In exam, suppose that similar questions come, don't worry, you write down statement of PL only. Correct? Means we can't use statement of comprehensive income, but now we know that statement of comprehensive income is nothing but a statement of profit and loss. What are the provisions that company is required to make as per Ind AS 37? Correct? Means very simple question, but with the length of the question, sometimes the question become dangerous because you are not able to read and understand in exam. I hope you are understanding what I am saying. Are you able to understand? Because the length is very big. So sometimes when we read in exam, we are not able to analyze it. And if you are not able to analyze it, you are not able to write it. Or sometimes we take much time to understand the question only. So if the question required 10 minutes, if you have taken 25 minutes for writing the answer, even though it is correct, can you say 50 minutes extra you have taken? That is also dangerous. That is also dangerous now. So it means if you are taking more time or if you are not able to understand the question, both are dangerous from exam point of view. So you need to be expert in both aspect, understanding as well as time management. Then only you can score good marks in exam, not only for FR subject, it is for every subject. Correct? Yes, sir. So I'm here to, means when I read the question, my focus will not to understand solution. My focus will be to understand the question. Once you understand the question only, then only you can apply the concept. So reading of question is very important. How to read the question, that is very important. Once you have understood the question, believe me, 90% of the student will be, means 90% time you will be able to answer it correctly. Are you able to understand how to read, that I need to explain na? Are bolna rahe? How to read, that I need to explain. So right now I have read. You have not read, huh? Bolna yes or no? Now how to read? So this is question number. One minute. Now, everyone. So this was question number 28. Okay. So first, while reading the question, you should draw a timeline. Means while reading, not after reading. After reading means you are reading the question two times. But if you want to save your time, you to read question and draw timeline simultaneously. Correct? So can we start with the first date? What is the first date? What they have given? Question number 28. So they have given on 30. This is what? 31st March 2018. Right on year end is what? 31st March 2018. What was the date of public announcement? What was the date of public announcement? It was 15th May 2018. Correct? So 15th May, I write down 31st March 2018 यहाँ पर. It is 15th Feb 2018. So 15th Feb 2018 is the date of public announcement. And when the decision was taken, I forgot that date. Decision was taken when, on which date? The financial statement was authorized on 15th May. So 15th May will be somewhere यहाँ पर. 15th May 2018. And when the actual decision was taken, the decision was taken on which date? 31st Jan. Correct? 31st Jan. So 31st Jan, that decision was taken. 31st Jan 2018, the decision was taken. Correct? On 15 May, they have given the estimated cost of termination cost and relocation cost. Termination cost, how much they have given? Termination cost, how much they have given? It is, on the date of public announcement, it is how much? 540 lakhs. 540 lakhs. And it becomes 60 lakhs. Understood? And actual cost on 15th May was how much? 520 lakhs. And once again, they have re-estimated the relocation cost on this date, how much? 60 lakh. 63 lakh. And this is the date of approval only. Correct? What is the actual closure date? 38 April 2018. Correct? They have given that for the current year, what is the loss? For the current year, what is the loss? 400 lakhs. And what is the future operating loss up to the actual closure? 60 lakhs. Correct? Can I say this become future operating loss? Future operating loss. Understood? Can I say entire question I have incorporated in this timeline? But while reading the question only, so it should not take extra time in exam. And there is no need write down what? In a good handwriting. You can write down so that you can only understand. This is not for examiner. This is only for your working. Only for your working. Correct? Yes, sir. The first thing, can I say we need to find out whether we can create provision on 31st March 2018. So you need to find out whether there is a constructive obligation on 31st March 2018 regarding restructuring. Yes. Why? Can I say if they have made public announcement, it means of course there is a detailed formal plan and only that plan has been announced. So both the condition has been satisfied. Therefore, there is a constructive obligation for restructuring on 31st March 2018. Therefore, can I say provision can be recognized on 31st March 2018 for restructuring cost. Now, what will be the amount of provision that we need to calculate? So, can I say the restructuring cost will include termination cost? Termination cost, because this is directly related to restructuring only, but the amount of termination cost will be 540 lakh or 520 lakh. 540 lakh or 520 lakh. You are saying 540 lakh because you have not done till now Ind AS 10, or you may have forgotten AS 4. Can I say, of course the estimated amount was 540 lakh, but can I say with an event occurring before approval of financial statement, now we know the actual amount. So of course we should create a provision with the actual amount only. Correct. The detailed discussion 1 second for this will be done under Ind AS 10. So of course you should create a provision for 520 lakh because this amount is known before approval of financial statement. The provision for restructuring cost will include termination cost with an amount equal to 520 lakhs. Correct. Understood? Means in this we have applied Ind AS 10 also. We have applied Ind AS 10 also. Correct? Got it? Now you only say whether the restructuring cost will include relocation cost. Relocation cost. Okay, relocation cost or retraining costs are dependent on future conduct of business. Therefore, there is a provision for restructuring cost will not include relocation cost. Therefore, this should not be considered. Therefore, this should not be considered for creating provision for restructuring cost. Correct? Understood. Can you see this 400 lakh is the actual loss of this year? This will be already recognized. So this will not be considered for provision because it is the actual loss. But will you include future operating loss? The future operating loss will also not be considered for provision. It means, can I say provision for restructuring cost will be only what? 520 lakhs. Understood? Have you understood? Big question, but answer is very small. But you can understand only when you can answer only when you have understood the question. Got it? Yes, sir. How to write? The answer is given. You can read by your own. Correct. But just delete this para. Delete this para. And make one changes. It will be only 520 lakhs. The answer will be what? 520 lakhs. Got it? Have you understood? Restructuring understood? Got it. Correct. Now let us do the balance point of this chapter. Come to the point number 8. Changes in provision. Can I say, of course, can I say the provisions will be reassessed at each reporting date? Circumstances may change. Circumstances may change. So can I say the amount of best estimate require also changes? Due to such changes, any amount should be either increase or decrease. And if the provision is no longer required, it should be reversed. It should be reversed. Simple. So what they are saying, provision must be reviewed at each reporting date and adjusted to reflect the best current estimate. Correct? If provision is no longer required as it is not probable, suppose the provision is no longer probable, the amount outflow is no longer probable, the provision is no longer required, so it will be reversed. Amount of provision must be reversed. correct? Then unwinding of provisional amount. This is very important from examination point of view. Unwinding of provisional amount. Correct. We have understood that provisions should be created at a discounted amount. Correct. Means just try to understand that if suppose this is the reporting date and this is the 1 year, 2 year and 3 year, and amount is payable 10 lakh. So you will find out present value of 10 lakh. Correct. Present value of 10 lakh. Suppose the rate of interest is equal to 10%. So it will be 10 lakh multiplied by 0.6, 0.751, 0.751, which will be 7 lakh 51,000. It means you have created a provision with an amount of equal to 7 lakh 51,000. So what journal entry you will do? Profit and loss account. Profit and loss account debit to respective provision. 7 lakh 51,000. Correct? Have you understood? Now suppose this amount remains same only. Let us assume that 10 lakh remains same. 10 lakh means there is no changes in the amount of expenditure. Because that 10 lakh was an estimated amount. So this may require reassessment. Let us assume 10 lakh remain 10 lakh only. Correct? But can I say actual payments should be 10 lakh? But we recognize how much? 7 lakh 51,000. So it means 7 lakh 15,000 will be converted, should be converted into 10 lakh by adding what? What will add? What will add? Interest amount. When I say present value, to present value means what? We deducted interest. So we should convert present value into what? Future value by adding what? Interest. So can I say year 1 and year 2 and year 3 and will add interest component? Interest at what rate? 10%, and automatically can I say 7 lakh 51,000 will become 10 lakh at year end 3, and that amount will be paid if there is no changes in the amount of expenditure. So this adding of interest is known as unwinding of provisional amount. This adding of interest is known as what? Unwinding. Unwinding means when we say calculate present value, it is known as winding of the amount. When we say convert present value to future value, it is known as unwinding of present value. Understood? We unwind it, correct, by adding what? Interest amount. So interest will be added to the carrying amount of provision, and that interest will be considered as borrowing cost, which will be charged to profit and loss account as an expense. Have you understood? So this interest will be considered as what? Borrowing cost. Simple. I think you can calculate interest cost simply by using calculator. My help is not required. Have you understood this point? This is known as what? Unwinding of provisional amount. The word you have understood, unwinding of provisional amount. Got it? What they have given. When discounting is used, the carrying amount of provision increases every year. Correct? That increased amount is treated as what? Borrowing cost. The amount whatever has been added to the carrying amount of provision for unwinding is known as what? Borrowing cost. Understood? Simple. Any doubt in this? No doubt? बोलना रही. Simple na? It will be charged to PL. Correct? Borrowing cost will be charged to PL. Now when provision is the reverse, means what journal entry you are doing? Let me take one question. Let me take one question for better understanding. Come to question number 9. X Telecom Limited has an income tax litigation pending before appellate authorities. Legal advisor opinion is that X Telecom Limited will lose the case and estimated the liability of rupees 1 crore, which may arise in 2 years. The liability is recognized on a discounted basis. The discount rate which the liability has been discounted is 10%. It is assumed that discount rate does not change over the period of 2 years. Means there is no change in discount rate. How should X Telecom Limited calculate the amount of borrowing cost? Understood? Let us do it. Question number 9 we are doing. Question number 9. Correct? Let us assume this is year end 1, because provision always we create at year end. They have not given year, therefore I am assuming this is first year, year end 1. We create the provision. What journal entry you will do? Profit and loss account debit to provision. What will be the amount? 10 lakh. 10 lakh ki 1 crore. 1 crore. 1 crore into what? 0.2 year. 0.82 826 1 na. 826 4. It become 8 lakh. Sorry, 82 lakh 64,000. Correct. Then year end 2. Year end 2. Are you able to understand? What journal entry will do? Borrowing cost transfer to PL only, and provision amount will increase. So it will be 82 64,000 into 10%. How much? 8,26,400. 8,26,400. Then year end 3. Don't be confused by year end, huh? It is 2 year only. Means you will say this is 1 year and this is second year. Are you able to understand what I am saying? Correct. Then same entry will be repeated. Borrowing cost transfer to PL account debit to provision will increase. Can I say last year interest should be always calculated as balancing figure due to approximation. You will do this plus this minus 1 crore. How much? This plus this minus 1 crore. How much is coming? Due to approximation. Correct? (9 lakh) 9,600. 9,06,600. Automatically the amount become 1 crore. And on this date only, if suppose actual payment happen, we will say provision account debit to what? Bank. If it is actually paid on this date only, it will be 1 crore only. This process is known as what? Unwinding of provisional amount. Have you understood now? Correct? This you have understood? Now, what was the doubt? Doubt was that suppose at year end 2, it is no more probable. So the amount of provision will reverse. The amount of provision become this plus this now. We reverse this plus this, so total amount of provision through PL only. Understood now? So whatever is the amount of provision, that will reverse. But borrowing cost will be charged to PL. Are you getting what I am saying? So reversal will be for the amount of provision. Whatever amount of provision is coming after unwinding. After unwinding. Understood? Got it? Doubt clear? Doubt clear. Hello. This also you have understood. Then use of provision. It is very simple. What India 37 says that amount of provisions should be used only for the purpose for which it has been created. Means the provision amount should not be used for any other purpose. If it is no longer required, reverse it, but it cannot be used for any other purpose. Understood point? Understood point? I think use of provision you have understood. What will be the accounting treatment? So accounting treatment is what? If it is related to expense, means if the provision whatever you have created is related to expense, so journal entry what? Expense account debit to provision. expense will be transferred to PL. So normally we pass one compound journal entry, PL account debit to provision, but better journal entry is what? Expense account debit to provision and then PL account debit to expense. बोलना yes or no? So can I say expense account debit to provision and that expense will be charged to PL. Once you reverse it, the journal entry is what? Provision account debit to expense, or we can say provision account debit to PL. Have you understood? So this journal entry from bachpan se you are doing. I think no clarification required, but sometime the amount of provision is directly related to the cost of construction of an asset, etc. Means if it is related to acquisition or construction of an asset here means it can be property, plant and equipment or etc. Correct? So if it is related to construction or acquisition of property, plant and equipment, so can you say the amount of provision should be capitalized? The journal entry will be asset account debit to provision, and when you reverse it, the journal entry will be what? Provision account debit to asset. Have you understood? But can you say this journal entry you are doing for the first time? You are not supposed to leave me till I give any example. Are bolna re? Means you are not supposed to leave me because this is the first time you are listening asset account debit to provision. So you want one example. So right now I will not give example. The example will be given when I will do Ind AS 16. You need to wait for the example. Ind AS 16, I will once again come to this topic, don't worry. Ind AS 16 is nothing but property, plant and equipment. So when I will come to Ind AS 16, I will only come to this point and I will help you to understand this journal entry. Simple. But one thing you have understood, that if the provision amount is directly related to acquisition or construction of asset, it should be capitalized only. But what will be that particular case that I need to inform you? Got it? Yes, sir. So this also you have understood. Then come to the next point, scope. Scope means what? What is covered in this chapter, what is not covered in this chapter. However, this scope is the first point of this chapter, but normally I take at the end. Why I take at the end? Because scope you can understand only when you have understood the entire chapter. What is covered, what is not covered. So Ind AS 37 is not applicable to executory contract unless onerous. Now you can understand. But if I would have said at the first point only, whether you would have understood this point? No. So now you have understood that it is not applicable to executory contract unless it become onerous. It is not applicable to any financial instrument. Financial instrument means financial asset. Financial asset means, example you can add down. Example you can add on debtor. Already we have discussed that provision for doubtful debt. Now we don't call it provision for doubtful debt. Now we call it impairment loss on financial asset. Is not covered in this chapter. Impairment loss on financial asset is not covered in this chapter. Understood? Income tax. Of course, income tax, we should create provision for income tax, but that whatever provision we create for income tax is covered under Ind AS 12 coming soon. You have done AS 22. AS 22. In your CA Inter, you have done deferred tax, current tax. So it means the deferred tax computation will be done as per Ind AS 12, not as per Ind AS 37. Correct? Then employee benefit. Any provision for employee benefit. Any provision for employee benefit will meet a definition of provision. It is a provision for employee benefit, means it is a liability only, but it will be covered under Ind AS 19. So there is a specific Ind AS, we need to go to that Ind AS. Correct? Then any provision which should be calculated for insurance contract, we need to go to which Ind AS? Ind AS 104. But Ind AS 104 is not in our syllabus. Not in our syllabus. Why it is not in our syllabus? Why it is not in our syllabus? Because right now Ind AS 117 is in drafting stage, and once Ind AS 117 will be effective, Ind AS 104 will be deleted. Correct now? So what institute believe that Ind AS 117 is coming soon, and whatever accounting of insurance contract will be done as per Ind AS 117, and right now to insurance company Ind AS is not applicable, so there is nothing to do about Ind AS 104. I hope you are understanding. So it is right now not applicable only. Insurance contract means insurance company na, and to insurance company what is not applicable? Ind AS is not applicable. So there is nothing to teach right now about this insurance contract, and therefore it is not in our syllabus. Means once Ind AS 1167 become effective, so then Ind AS will be also applicable to insurance company. So become CA as soon as possible. Correct? Otherwise, that also you need to read from exam point of view. Then any contingent consideration arising in business combination, means any consideration which is contingent. Consideration means purchase consideration which is contingent. Correct now? Contingent in case of business combination will be covered under Ind AS 103. It will not be covered under Ind AS 37. Can I say? But this can be better understood when we will do respective Ind AS. Even though I have said right now, but you will forget till we do Ind AS 12, Ind AS 19 and Ind AS 103. So this will be better understood only when we do respective Ind AS. Got it? Have you understood this point? Now what is the difference between Ind AS 37 and AS 29? Now question arises whether it is a part of syllabus. It is a part of syllabus. So answer is right now no. But if you see ICA study material, they have given this difference in ICA study material. Understood? So because it is a part of ICA study material, as a teacher I should teach or not? Even though it is not a part of syllabus, can I say as a CA student you should know? So I am just covering it from what? Practical point of view. You can ignore it from exam point of view. Understood what I am saying? Have you understood this whatever I am saying? Yes sir. So already I have said first difference is regarding constructive obligation. Can you see Ind AS 37 deals with constructive obligation, but AS 29 was silent regarding constructive obligation. Second difference is discounting. Can you say Ind AS 37 allowed discounting if the time value of money is material? TVM means what? Time value of money. Correct. But AS 29 does not allow discounting. Does not allow discounting. So not allowed. Only there is one exception. Means AS 29 allow discounting in only one exceptional circumstances. These exceptional circumstances I will refer, but not right now. When I will do Ind AS 16. When I will do Ind AS 16, automatically you will understand that AS 29 allow discounting only in this particular circumstances. Otherwise, discounting is not allowed under AS 29. Contingent asset, as per Ind AS 37, contingent asset will be disclosed in notes to account. However, AS 29 used to say it required disclosure in the report of approving authority, means director's report, bakwas point. Correct? Then onerous contract. This point I have not referred till now, but you have understood onerous contract. You have understood onerous contract. Correct? Now just try to understand. I have given one example of property, plant and equipment. Means we purchase one plant. We have done one contract to purchase a plant after 2 years or 3 years. I have given one example. Then the change in method of production. Correct now. So that contract become onerous. So in that contract, plant was the asset, and plant is the property, plant and equipment. And for property, plant and equipment, the loss will be covered as an impairment loss. Means what Ind AS 37 says that if any asset is related to onerous contract, first you apply impairment loss, then balance amount will be what? Provision as per Ind AS 37. Correct? So what they want to say? It requires recognition of impairment loss on the asset dedicated to such contract. What Ind AS 37 says? If there is any onerous contract, first calculate what impairment loss on the asset dedicated to such contract before any provision is created as per Ind AS 37. But can I say this point you will understand only when we'll do impairment loss, because right now we don't know impairment loss. So just write down refer Ind AS 36. Write down refer Ind AS 36. Automatically you will understand this point when we'll do Ind AS 36. Got it? However, AS 29 was silent regarding this. AS 29 was totally silent regarding this point. Understood? This become differences. So very few differences. AS 29 and Ind AS 37. Got it? Ind AS 37 is over from my point of view. Got it? Any doubt? I will take only one question. After that question, all balanced question will be your homework. But that question also can be done only after India's 10. So better I will take first India's 10, then I will come to that question. Okay. So is that question? Question number 28 we have done. Let us do question number 32 by your own. Question number 33 by your own. 34 by your own. Do this 36 by your own. Whatever question I am informing you, that are the question where doubt may come. Understood what I am saying? Are you able to understand what I am saying? So doubt may come. It does not mean that you are supposed to do this only these questions. It does not mean you are only supposed to do this question, but if you have less time, first do this question, then do balance question. Are you getting what I am saying? Suppose you have only 20 minutes. So first do this question, then come to other questions. But this question need to be done today only. So that if any doubt comes, you can come to the next class and ask me. And if there is no doubt, can you say we have saved time in class? If there is no doubt, we have saved time na? Are bolna re? Correct? So please do this all question by round. This 29 I will do after India's 10. So question 29, if suppose I have not done this question, you can do only after India's 10. This is expected. This is expected. Okay. There was more question where doubt was there. Finding that. Question 13. Why I am not doing this question? Just try to understand. When I do the question, then actually doubt is no more doubt. And you will not understand the importance of that doubt. Are you getting what I am saying? Not able to understand. When I will do, then actually you will understand automatically and you will feel that the question is very easy. You will feel that question is very easy and will not give importance to such question before exam. Are you able to understand what I am saying? So you need to find out, yes, this question is having some doubt, and let us discuss that doubt only once you realize that yes, there are some doubt. However, if you will not say, I will only come to this point and I will discuss. Don't worry about a question. I will take all the question where the doubts comes. Correct? There was one more question. I forgot. Well, okay. That question was simple only. Let us do that question to inform you that yes, there are some questions where you need to focus. Read question 4 right now, and I will inform you the importance of doubt. Read this question 4 right now by your own. Done? Batao. What will be the amount of provision? Amount of provision will be equal to what? Amount of provision will be 30 lakh. No doubt about this. Correct. So in 30 lakh there is no doubt. What will be the reimbursement? Amount of reimbursement will be how much? Bolo? Amount of reimbursement will be how much? 85% of 2 crore 50 lakh. What is the amount? 2 crore 12 lakh 50,000. Correct? 2 crore 12 lakh 50,000 is the amount of, means possible inflow. Is the possible inflow? Correct? I hope you have understood. Now the question is that should we recognize an asset or it will be a contingent asset? Means inflow is virtually certain, then recognize asset. If it is not virtually certain, if the amount is probable, then it will be a contingent asset, disclose it. So whether you recognize asset or contingent asset will be disclosed. Means you are saying it is virtually certain. Everyone is saying asset or someone is saying contingent assets. Informal information. Informal information means what? Means when I am saying it is received informal information, it means it is not virtually certain. Very good. Those who have understood informal information means you have understood a question. And those who have not given importance to this word, they will be confused and they will say it is virtually certain and they will recognize the asset. That will be 100% wrong. So informal information means right now it is not virtually certain and therefore we should disclose what? The amount as contingent asset. Understood? The small point can become dangerous in exam. And therefore these are the points which you need to identify by reading the question. But once I will read and I will inform, it might happen that you are not able to give importance to such point. If I will read, so I will only explain now. And when I will explain, you will say, okay sir, thank you very much, maja aa gaya. But when you read, you do some mistake. When you do some mistake, you will need to find out why you have done that mistake. And once you have find out why you have done that mistake, then you will always take care of the such point. Write down yes, question 4, and whenever there is a doubt, always give some star mark and just highlight that particular point. So now this question number 4 become doubtful question. So guys, before exam you should read this question, and in this question only a particular point, informal information. So these are the strategy which you should develop for revision purpose. Because when you are revising last time, so you will not read the entire question now. You don't have time to read all the questions. So now you know that question number 4 need to be taken care, and in question number 4 only one point need to be taken care. That is what? Informal information. Understood? Have you understood? Correct. Now from my point of view, this chapter is completed. Balance question you do by your own. Correct. Can we start a new chapter? Let us start without wasting your time. Chapter number 6, event after reporting date. Event after reporting date means AS4. Correct? AS4 bolna yes or no? AS4. Okay, this is the only one AS which you have totally understood at CA Inter. Am I right or not? Only one AS which you have totally understood. In this AS there was nothing. Even occurring after balance sheet date before approval of financial statement. This type of events are of two types: adjusting event and non-adjusting event. Adjusting event will be adjusted, non-adjusting event will not be adjusted, it will be only disclosed. Only this much, chapter over. Are bolna re. Correct? Understood? Well, let's see what you have understood, what you have not understood at CA Inter level. Correct. So the topic is event after reporting date. But can I say all event after reporting date will not be covered in this chapter? All event after reporting date will not be covered. Only those events which occur after reporting date but before approval of financial statement. Correct? Means if this is the reporting date 31st March, and this is the date of approval of financial statement. So only we are considering this event. Only this event means any event which occur after approval of financial statement is outside the scope of this chapter. Outside the scope of this chapter, even though it may be related to this financial year only. Even though it may be related to this financial year, but if any event which occur after approval of financial statement is not at all relevant for this chapter, correct? Now one question arises, sir, you said after reporting date but before approval of financial statement. So when the financial statement are approved, when the financial statement are approved, bolo, when the financial statement are approved, when board of directors sign the financial statement, when board of directors sign the financial statement, once the board of directors signed it, can you say it means financial statement are approved for issue to whom? To shareholders. To shareholders. So that date will be considered as date of approval. Date of approval of financial statement. Date of approval of financial statement. I think no clarification is required for this particular point. So what is the meaning of event occurring after reporting date? Are those events which are favorable or unfavorable? Which are favorable or unfavorable? Which may be favorable, which may be unfavorable, and which occur between reporting date. Reporting date means 31st March in India. India it will be always 31st March, correct? And the date when financial statements are approved for issue. So when I say approved for issue, so can I say it will be always the date of approval by whom? By board of directors. By board of directors. Means in the definition it was not given it will be approved by whom. In the definition it was not given it will be approved by whom. But can I say, of course, can I say when I am saying financial statement I approve for issue, it means it is signed by whom? Board of directors. But sometimes some doubt will come. Just try to understand. If I am saying this is the financial year and this is the board of directors meeting and this is the AGM, quite possible. Of course, AGM will be also held. So after board of directors meeting, what will be held? AGM. AGM will be held for this financial year only, na. So this is 22-23. So AGM is held for 22-23 only. And in AGM, can I say the financial statement is approved by whom? Approved by shareholders. Correct. In board of directors meeting, it is approved by board of directors. I hope you are understanding. Now one doubt will come. Sir, when I am saying approved, when it is approved by, it is approved, means financial statement is approved for issue. So it is the approval by board of directors or approval by shareholders? Because shareholders is what? The owner of the company. Board of directors only represent whom? Shareholders. So one doubt will come. So India's 10 has given a clarification that even though it requires approval of shareholders, but that is only a formality. That is only a formality. The date when it is approved by board of directors will be the date of approval. One clarification has been given. One clarification has been given. Sometime what happen? Even though it is approved by board of directors, sometime what happen? Even though it is approved by board of directors, but it require approval. It also require approval of some supervisory board. For example, we have taken loan from bank. We have taken loan from bank. 500 crore loan has been taken. So bank will appoint some of their officer as what? Non-executive director of that company, who will cross check whether everything is correct or not, means whether they are not misusing the amount or not. Means 500 crore loan has been taken, they will misuse the amount and they will not repay the amount. Then to, are you able to understand? So they may appoint some of their officers in the supervisory board of what? This company. So after approval from board of director, it need approval of what? Supervisory board also. But can I say that is also what? One formality. a clarification has been given that in any case the date of approval will be the date of approval when it is approved by board of directors. Understood? Have you understood? Now the question arises, is sir, why only this date? Why not this date? One question maybe arises. Bola yes or no? You said sir this date, but why not this date? Are you able to understand? One question may be asked or not. So we should also consider what this date also. What is wrong in taking this date? Are you able to understand? This question may come or not. In CA Inter you will never ask this question, but CA final you should ask. Why sir you are saying this date, but we can take also this date, and this become event occurring after reporting date? Are you? Do you know the reason? What is the reason why we have taken this date only? Correct. Because once it is approved by board of directors, then financial statement cannot be amended. Means financial statement can be amended only before approval of financial statement by board of directors. Means practically first we prepare financial statement on which date? On 31st March. But this financial statement is known as draft financial statement. This is known as what? Draft financial statement. Understood? And then can I say audit will be started, will commence audit, and once audit will be completed, after audit the auditor report will be given to whom? Board of director. Correct now? For their reference, after going through auditor report etc., they will finalize what? Financial statement. Means they will sign financial statement. Once it is signed, then it cannot be amended. It cannot be amended. Means can I say financial statement can be amended for any event which occur after reporting date but before approval of financial statement, and therefore this date become relevant date. This date become a relevant date. Are you able to understand what Are you able to understand? Understood? Correct. But sometime what happened, through articles of association some power has been given to the owner of the company. Owner means any owner of the company. Suppose just try to understand Mukesh Ambani is the owner of major shareholders, but it might happen he is not in the board of directors. Suppose, correct now. Mukesh Ambani is the major shareholders of Reliance Industry or any other companies, but he is not in the board of directors because he is a lot of busy. He is busy in some other works, so he is not in the board of directors. Suppose let us assume, correct now. So can I say it might happen through articles of association some power has been given to Mukesh Ambani that even though it is approved by board of directors, you can come and cross check entire financial statement, and if you find something wrong you can reopen the books of account. Bolna yes or no? Are you able to understand? So sometime some power is given to some officer or owner of the company to reopen the books of account through articles of association. If such power has been given, and suppose once it is approved and it is reopened on this date, so this become date of approval. This become date of approval, because if you can reopen, it means you can adjust it, and if you can adjust it, this become date of approval. I hope you are understanding what I am saying. Have you understood this point? Correct. So some clarification has been given. What are the clarification? Let us read. Clarification on the date of approval. If financial statement are to be approved by the shareholders after financial statement are approved by board of directors, financial statement are approved for issue on the date of approval by board of directors. Understood? If financial statement are issued to supervisory board of non-executive director for approval after management approve financial statement are approved for issue when management approve financial statement. Correct? If financial statement are approved by board of director after public announcement of profit, just try to understand. When I am saying financial statement is approved, the approved means finalized, means profit is known. Means can I say only the date when financial statement are approved, then only we know the actual profit of the company, actual profit, and after that approval, the information is going to the public. Are you able to understand what I am saying? But what happened practically? Just try to understand. What happened practically? It might happen the entity is preparing quarterly report. Q1, Q2, Q3, Q4. Correct? So Q1 profit will be announced somewhere यहाँ पर. बोले या सुनो, Q2 प्रॉफिट विल बी अनाउंस समवेयर यहां पर, Q3 प्रॉफिट विल बी अनाउंस समवेयर यहां पर, एंड Q4 प्रॉफिट विल बी अनाउंस समवेयर यहां पर. मीन्स कैन आई से ऑन दिस डेट Q1 plus Q2 plus Q3 plus Q4 is already announced to the public. अरे बोलना रे. Are you able to understand? Means profit is already announced. And normally what happens? Normally means interim financial report and annual financial report are different. Means whatever profit in interim financial report may be different from annual financial report, but normally what you will say means if you have prepared any interim financial report, you will see that interim financial report profit will be equal to the annual financial report profit normally, but it can be different, it can be different also, correct? But if you go to means practical case, Q1 Q2 Q3 Q4, the total profit will become the profit of annual report. Are you able to understand? But can I say annual financial statement will be approved, means board of directors meeting will be held yahan par for annual financial statement, and annual financial statement will be signed at this point of time, but the profit is already known at this point of time. So what they want to say, if the profit is already announced before approval of financial statement, so what will be the date of approval? This is the date of approval, this is the date of approval. So once again they say date of approval will be remain same only. This is only a clarification, only a clarification. Can a same question if asked in exam can be difficult? Because they will create one case study and they will try to confuse you. बोलना yes or no? They will say Q1, Q2, Q3, Q4 profit is announced, already informed to the user of financial statement. Now whether we can make any changes? You'll say no. Yes, we can amend, because amendment can be done for all these events which occur after reporting date but before approval of financial statement, but only for which event? Adjusting event. Correct? So now you have understood what are event occurring after reporting date. Now in India we will not call it balance sheet date. In India always we call what? Reporting date. Have you understood this much? Any doubt? Correct. This much? Now it is very easy. Whatever event occurring after reporting date are of two types: adjusting event, non-adjusting event. Adjusting event are those events which provide evidence of the condition existing on reporting date. Know this point. Adjusting event are which event? Which provide condition existing on reporting date, sorry, which provide evidence of the condition existing on balance sheet date. Non-adjusting event are those events which relate to condition after reporting date. Non-adjusting event are those events which relate to condition arising after reporting date. Meaning is simple. Adjusting event will be adjusted, non-adjusting event will not be adjusted. It requires only disclosure if the amount is material. Simple. India's 10 is over. Much only. Examples are given that we can do. There are some special case that we can understand. If you have understood adjusting, non-adjusting, we can understand. But let me take some example to understand whether you have understood or not. Correct? Example number 1. All examples whatever I am taking is initially will be those examples what you have done at CA Inter level. Dhire dhire I will increase the level of example. If you want to write. If you don't want to write, then also write. Correct? Got it? But I'll be fast. You need to cop up my speed. Okay? Example number 1. This is 31st March. This is date of approval. Correct? There was one debtor. Remember, in the faculty always start with this example only, debtor. Yes or no? And sometimes we feel that in the AS4 is for debtor only. Yes or no? Sometimes we feel. Because they will give 4 or 5 examples for debtor and they will say over, game is over. बोलना yes or no? All faculty including me in CA Inter level will start with debtor only. But it is not only related to debtor. It is not only related to debtor. So suppose there is one debtor, Mr. Ram, whose amount is 10 lakh. Receivable is 10 lakh. Before approval of financial statement, fire occurred in factory of Ram. He become insolvent. No amount is recoverable now. No amount is recoverable. For the adjusting, non-adjusting. Adjusting, non-adjusting. Huh? Adjusting even, non-adjusting even. Everyone saying adjusting? Means everyone is wrong. Means in CA Inter you have not understood, huh? It means CA Inter you have not understood. I say you passed exam without concept. Because you understood a question but you have not understood a concept. First example, bold. Clean bold. Clean bold na? Are bolna yes or no? You need to realize this fact. Till you realize, you will not improve yourself. Improvement is required. Demotivation should not come. Improvement is required. Now improvement will come only when realize that we have not understood. I hope you are understanding what I am saying. Always improvement should be there, na? So we will improve. Okay, sir, how it is wrong? Just try to understand this debtor. I said Ram, whether it was a doubtful debtor on 31st March. He was a good debtor only, na? I have not informed you that he was insolvent on 31st March only. He was a good debtor, na? Are bolna yes or no? He was a good debtor. If he was a good debtor, there was no condition existing on reporting date. Means condition arises after reporting date. So how it become adjusting event? How it become adjusting event? It is a non-adjusting event, na? Bolna re fast. Non-adjusting. Got it? There was no adjustment required. If the amount of loss is material, then disclosure is required. Can I proceed? Example number 2. Once again, there is one debtor whose name is Ravan. So Ravan, amount is what? 10 lakh. But what happened? The credit period allowed was 2 months, which is already expired. Already expired. Means can I say now it become doubtful debtor? Now it become doubtful debtor, na? Doubtful debtor. And if it is doubtful debtor, so you will apply, you will recognize some impairment loss as per respective Ind AS. Means you will calculate impairment loss as per Ind AS 109, which is coming soon in your life. Which is coming soon in your life. Let us assume that you have already applied Ind AS 109 because you will prepare draft financial statement, na? Are bolna re? So on 31st March you will prepare draft financial statement. So of course the whatever the accountant or chartered accountant of that company will calculate impairment loss as per Ind AS 109, and you created some ECL. ECL means expected credit loss. This is nothing but provision for doubtful debt. But now we'll not call it provision for doubtful debt. We'll call it allowance for credit loss or allowance for bad and doubtful debt. But we'll not call it provision. I hope you are understanding. Suppose you created expected credit loss of 2 lakh based on current circumstances. How this 2 lakh is created, don't ask me right now. Have you understood? So this becomes net debtor. So 8 lakh will be shown in the balance sheet as a net amount. Understood this point? ECL means what? Expected credit loss. expected credit loss. All are new terms in your life. Dhire dhire you will become expert in this. ECL, but once we come to Ind AS 1099, it will be in your mind forever. But right now it is very initial stage. Initial stage, you might be thinking, or ECL, expected credit loss, what will happen, will die. Nothing to think much right now. Okay? Now, what happened? Now, one information came from the market that he become insolvent. He become insolvent after balance sheet date, but before approval of financial statement, and no amount is recoverable. No amount is recoverable. But the adjusting, non-adjusting, adjusting, non-adjusting, adjusting, non-adjusting. Of course, this is adjusting event because it provide condition, it provide evidence for the condition existing on reporting date. So it is an adjusting event, no doubt. Adjusting event. Just try to understand. I am just giving one logic of this Ind AS 10. What Ind AS 10 want to say that if there is some condition on reporting date, and for that condition, if you have done some estimation, and before approval of financial statement, if you know actual amount, the provision should be based on actual amount or estimated amount. Actual amount only. Means just try to understand, there was a condition that this data will become doubtful, and you have applied best estimate as per the information available on 31st March, and based on best estimate you calculated the amount of loss equal to what, 2 lakh. But before approval of financial statement, you came to know that the loss is not 2 lakh, the loss is 10 lakh. So you should create an allowance for 2 lakh or 10 lakh, 10 lakh only. Understood? Means, can I say we are here to give correct information to the user of financial statement. If that information come before what, approval of financial statement, what is the logic? Now in class, whatever question I'm asking, don't think from concept point of view, think from logic point of view, think from common sense point of view, whether this information should be given or should not be given. So can you say, if the loss is 10 lakh, better we should provide a loss of 10 lakh only, because that information known before approval of financial statement, and that provide evidence of the condition existing on reporting date. Understood? Correct. This much you understood, adjusting. But my one more question, answer over, means from exam point of view, answer over. But what journal entry will do on 31st March? On 31st March, what journal entry will do? I'll give you two journal entry. You will say me which journal entry is correct. Journal entry means adjustment, means adjusting entry na. You will do some entry on 31st March. So what journal entry will do on 31st March? That we need to understand. Journal entry. I'm giving you two journal entry. Journal entry number 1, bad debt eight lakh. Already we created ECL of how much? 2 lakh to debtor. Means entire 10 lakh will be transferred to PL and debtor will be reduced. Second journal entry is what? ECL will be increased by 8 lakh. Correct? 2, allowance for bad and doubtful debt 8 lakh. Have you understood what I am saying? You can say bad debt, account debit, allowance already we have created how much? 2 lakh. Which entry is correct? First one or correct? Second one. Means second one, what we are doing, we are increasing the amount of allowance, but we are not deducting the amount of allowance from debtor. Correct? Second, we are also deducting the loss from debtor, means debtor is also decreasing. There are two different journal entries, na? Which journal entry is correct? Second one or first one? Second one. So second one is correct. Means just try to understand what they want to say. Always we record transaction on chronological order only. Chronological order means what? As per date of occurrence, means actual loss happened on this date only. This is the date of actual loss. Means actual loss will be recognized on this date only. On this date it was what? Expected loss. So on 31st March we are recognizing expected loss. Are you getting what I am saying? Actual loss happened on which date? In the next financial year. So actual loss means bad debt will be recognized in the next financial year. In the current financial year only you need to adjust the amount of allowance for bad and doubtful debt. So this is not correct journal entry. This is the correct journal entry. Means increase the amount of allowance. Increase the amount of allowance by rupees 8 lakh. Understood? Correct? Example number 3. 31st March, date of approval. Once again, suppose there is a debtor whose amount is 10 lakh, and let us assume he was a doubtful debtor, and we have created an ECL of rupees 2 lakh. It become 8 lakh. Understood? Now before approval of financial statement, amount received from debtor. Understood? Quite possible. Amount received, entire amount received, amount of rupees 10 lakh received. Correct? So before approval of financial statement, entire amount received means on 31st March he was debtor, but quite possible now we have received entire amount. Quite possible na? Batao. Adjusting, non-adjusting? Adjusting even. Yes or no? And what adjustment is required? Huh? Yes, very good. Can I say adjusting means what? On this date, reverse the amount of ECL. Now ECL is no more required. On 31st March only, huh? On 31st March only. Got it? This you have understood? Example number 4. Suppose there was some legal case pending on 31st March, and as per India's 37 we have created a provision for legal damages. Are you getting what I am saying? Already a provision for legal damages created amounting to rupees 10 lakh based on India's 37 as per the best estimate. Correct? Now before approval of financial statement, what happened? Case decided. Favor of company or against company. It can be against company na. If it is against company, case decided, an amount actually payable is now 15 lakh. Quite possible. If it is favor of company, the amount actually payable will become nil. Correct. But the adjusting, both cases, favor or against, adjusting, non-adjusting. Adjusting event. Now I hope you have understood. Adjusting event. But if it is favor of company, what will do? Reverse the entire amount of provision. If it is against the company, what you will do? Increase the amount of provision by 5 lakh. You will increase 10 lakh will become 15 lakh. Will increase the amount of provision by 5 lakh. Suppose against the company an amount payable is now 9 lakh. It will decrease the amount of provision by 1 lakh. Understood? Have you understood? Simple. Simple na? Correct. Example number 5. Suppose there was one inventory. So inventory, because you know AS2, I am taking this example. Chalega? Correct. Now cost price is equal to 100 and NRV is equal to 120 on 31st March. What is the meaning of NRV? I have not asked full form, Baba. NRV means net realizable value. It does not mean it is the full form of NRV. When I am asking what is NRV, you will say net realizable value. Market price. It is market price. No, it is not market price. Market price is something different. NRV does not mean market price. NRV means what? You know what you know, therefore I am explaining. Estimated selling price. Selling price and market price are two different terms. At what price it can be sold? It can be sold below cost price also. It can be sold below cost price also. Correct? So estimated selling price minus estimated selling expense. Estimated selling expense means NRV is one estimation. NRV is one estimation on 31st March. Correct? Now what happened? Fire occurred. Fire occurred after 31st March before approval of financial statement. Inventory damaged. Inventory damaged na? Now NRV become what? Suppose 70. Batao. Adjusting, non-adjusting. Adjusting event, non-adjusting event. Non-adjusting. Non-adjusting na? Why it is non-adjusting? Because can I say this condition arises after reporting date. This condition arises after reporting date. Therefore, it is a non-adjusting event. Any doubt? You need to ask me. Don't write whatever I am saying. If you are not asking doubt, I will assume you have understood. Because these all examples are related to CA Inter. These all examples I do at CA Inter level. I don't know whether you have done or not. But these are CA Inter example. Understood? Correct. Example number 6. 31st March. Date of approval. 1 second, there is one inventory. Correct. Now cost price was 120 and NRV, let us assume it was 130. Understood? Correct. It was actually sold at rupees 90. Quite possible. It was actually sold at rupees 90. Quite possible. But the adjusting, non-adjusting. Huh? Non-adjusting, but this will be adjusting. Adjusting event. Why it will be adjusting event? Just try to understand. Everyone just try to understand. Same thing is given in the Ind AS 2 as well as AS 2. At this point, once again I will do in Ind AS 2. But try to understand. I said this is estimated selling price minus estimated selling expense. And when you do actual sale price, so you should take actual sale price now. Means this estimation was not correct. This estimation was not correct now. Arey bolna re. Means what I said apply your logic. Apply your logic. Now I have not said fire occurred. Means the same inventory what actually sold at rupees 90. Means there was no fire, no event occur. No event occur. Arey bola no fire occur, nothing happened. This was not a damaged inventory. Means I said NRB means estimated selling price minus estimated selling expense. Now you know actual information. Actual information was 90. Means this inventory was actually sold at rupees 90. This information came to you before approval of financial statement. You will take 130 or 90. You will take 130 or 90 to prepare financial statement. 90 only. Means you will take correct figure now. I said apply your common sense. Don't apply concept. Sometimes you apply concept, you will do mistake. Apply your concept. You know actual information before approval of financial statement. So your financial statements will be prepared based on correct information only. Arey bolna re. Understood or not? So can I say it will not be 130, it will be 90. Therefore adjusting event. Therefore adjusting event. Got it? Bolo. Correct? Example number 7. Once again inventory. Cost price is equal to 100. Correct? Understood? Now what happened? Demand decreases. And now NRB become means after 31st March before approval of financial statement. Demand decreases and NRB become 80. Quite possible. But adjusting, non-adjusting. Adjusting, non-adjusting. अच्छा, why demand will decrease? पहले बताओ reason. Reason बताओ. बताओ. You just give me the reason because I know you know about business. The one reason may be what? It become obsolete. Second reason. Bhai, I am not teaching economics. Correct? Obsolete, one of the reason. Second, due to competitions. Due to competition, etc. in the market. Are you able to understand? My question to you all, if you are into business, just try to understand. Okay, this is not nothing but 1 month or 2 month only. My question to you all that if you are into business, this information is available on 31st March or not? Yes. Obsolete. Any inventory will not become obsolete suddenly. But any inventory will become obsolete suddenly, then you will not purchase only. Then why you are purchasing it? If you know it will become obsolete within 1 month, why you are purchasing? Then you are not a businessman only. Means that information was known to you and you have purchased some year before. Means right now just try to understand. New scheme is coming. New scheme is coming now. My study material, whatever we have, I have a stock of study material that is going to change or not. So I know once the new scheme will be applicable, my study material, whatever India Saran's book, that will become obsolete. So what I am trying to do, I am selling at lesser price because I have a stock of some books now. So before new scheme is applicable, what I will do, I will try to sell it. Are you able to understand? Correct. Now I will try to sell it means that information is available to me or not, and the demand will decrease. I mean, right now demand has not decreased. Right now demand has not decreased, but after 1 month, 2 month, demand will decrease or not? Once new study material will come, demand will automatically decrease. Are you getting what I am saying? That information is available to me or not? So every businessman has that information to them. On 31st March, that information was available. So therefore, it will be what? Adjusting event. Have you understood what I am saying? Apply your common sense. Now we are entering into CA inter, not CA final level. This is an example of CA final level. Same question has been given in ICA study material. Believe me, I give lot of stress to this point in class. Then also doubt will come in before exam. So why it is adjusting event? Because you are not listening in class properly, or you are not applying it. When you are not applying, so can I say, when you do the similar question, you will find doubt. Apply. Try to apply. Don't consider yes it is okay. Got it? Example number 8. मजा आ रहा है? Now I hope you are understanding the difference between CA inter and CA final. Difference understood? Same thing I am teaching. Nothing difference. Same thing. This, I think this, up to this, so I take all example at CA inter level. This example I don't know whether I take or I don't take. Sometime I take, sometime I don't take. Because this type of question will not be asked at CA inter exam, but they can ask also. CA inter question are more difficult than CA final questions. One day I'll prove you, someday I'll prove that CA inter examination question more difficult than CA final exam question. They will always test you at CA inter level. Means filtration done where? CA inter level. Filtration, believe me, filtration always they do at CA inter level. It's CA final level, they don't do filter. CA final level, they don't do filter. CA final level, they will make you CA at right time. Either first attempt, or second attempt, or third attempt, or fourth attempt, or fifth attempt, or sixth attempt. Because I think that once you pass CA inter, 90% student will become CA. 90% student will become CA. But when you need to decide. 90%, but you also know that any student who is coming at CA final level, they will become CA. I think your senior also becomes CA, but the time matters. Time matters na. Are bolna yes, but all students who are writing CA inter exam will not come to CA final. They may quit. They may quit. After 2-3 attempts, they may quit. They will understand this is not my cup of tea. Are you getting what I am saying? Correct? So this is a difference. Difference means what? CA foundation, CA inter, CA final. Filtration यहाँ पर super filtration. CA foundation level super filtration. CA inter level also super filtration. But here no filtration. Believe me, no filtration. They will give question lollipop same to same. Pass हो जा रे, pass हो जा. We want CA ना? We want CA for the industry or not? They will say pass ho ja, but when you decide. And I am saying whatever I am saying, that is true fact. If you understand CA final is actually not a filtration, you start thinking it is very easy, you will become CA. Normally whatever lot of negativity is in your life, everywhere where you are going now, CA final is complicated, CA final is complicated. Bolo yes or no? Any student who is writing CA final exam, or any student who has written multiple attempts, they will never say CA final is easy. And can you see, you meet those people only? Normally you don't meet or don't discuss with CA, because your senior who becomes CA become busy na. He's busy in his life. He will not call you na. Who will call you? Are bolna re. Who will call you? Who is writing CA final exam? Whether he will say positive point or negative point? Negative point. And because of that reason, you also become negative. Once you become negative, you start taking CA is complicated. CA final is complicated. As you pass CA inter exam, if you can pass CA inter, you can pass what? CA final also. Stick to your what? Plans. Normally we don't plans only. At CA final level we don't plan. In CA Inter you have taken all classes in one academy. One academy. All subject in one academy. And that academy was planning on your behalf. You were not planning. Are bolna re. Means CA Inter level planning was done by academy. And you have not realized that. Planning was done. You only executed that. And because of that execution, you passed. Either in one attempt or two attempt, three attempt, that does not matter. But you passed now. CA final level, all subject in different faculty. Can you say, I will take planning only of FR? I will not do planning for SFM? Will I say something about SFM? No. Will I say something about audit? Will I say something about costing? No. Only FR. I will say FR, this you do revision. Only I will concentrate on FR. The other teacher will concentrate on their subject. So it means planning need to be done by you. And you don't plan. You fail in planning. And even though you plan, it is wrong planning sometimes. So planning need to be done. If you can plan it effectively, CA final is very easy. Plan it. Plan it. Understood? Means don't waste your time. Don't waste your time. Everyone is doing Article C. Don't give excuses that you are doing Article C. When I have become CA, I have also done Article C. Correct? My Article C was I will say my college was compulsory. The college where I have taken college, the college was compulsory. So my Article C, what was the time of Article C? So my college was from 7 to 1. College. 75% attendance was compulsory. So I need to go to college also. Correct? And then from 2 to 9 I used to go to Article C. No time for coaching only. Whether any time for coaching? No time for coaching. I have not taken any coaching. Only one coaching I have taken for direct tax. Whatever I am saying true. Then also I passed now. Coaching is not important. What is important? Determination. Coaching is not at all important. It does not mean don't come to me for coaching. It does not mean, because it is bread and butter for me. But believe me, coaching is not important. Believe me, coaching is not important for CA. If you are determined, you can study by your own from ICA study matter and you will pass. When you come to coaching, now you become dependent. Now you are dependent on me. You think teacher will teach, then only will study. When you become dependent, you become relaxed. When you become relaxed, more time will be taken. Don't be dependent on me. Even though if I am not teaching, you need to study. Got it what I am saying? Correct? But yes, if you are taking coaching, I will say if you are taking coaching, you should think about good marks. Not only for passing the exam, you should think about scoring good marks and scoring rank. Bolna yes or no? If you are taking coaching, so I am not taking coaching, I passed. I am not scored rank now. Now you are taking coaching, so you should think about rank. Are you able to understand what I am saying? So please, what I am saying, CA final is very easy. Once you realize that yes, it is very easy. If you will not realize it, you will waste your time. You will waste your time, multiple attempts will come. Because ICA will not let you to become CA easily. He will take best among what? You. And the best people will become what? I always say in my class, and this is a fact, just try to listen this statement. If you can understand this statement, it will be better for you. ICA will not give marks for correct answer. ICA will not give marks for correct answer. ICA will give marks for best answer. Simple. Rule is rule for everyone. Because everyone will not become selected, people only will become CA. Those who are writing best answer, that will give, he will be given best mark. So your answer might be correct, but it is not as per ICA requirement. Yeah, 50% marks, 40% marks. But if your answer is correct, best and as per ICA requirement, they will give you full marks. You need to understand what is correct answer, what is best answer. All correct answer may not be best as per ICI. Got it what I am saying? Correct? Yes, sir. Example number 8. I think inventory you have understood. Let us introduce machinery in your life. Means I am taking different examples so that you can understand this is for any transactions which occur after reporting date. Correct? Now let us take machinery. Suppose carrying amount is 10 lakh. It was sold before approval of financial statement at rupees 8 lakh. Batao. Adjusting, non-adjusting. Bolo. Adjusting, non-adjusting. Non-adjusting because can I say machinery is not valued at NRV. Inventory was valued at NRV. Machinery always will come at carrying amount only. Means we are not doing any estimation here, but this sale price is not relevant. The sale price is not relevant. So it become non-adjusting event. Means you can understand this is non-adjusting. Similar example we have taken for inventory. This become adjusting event because it was NRV. NRV was an estimation. So example number 6 it become what? Adjusting. But when I am coming to machinery, property, plant, equipment, example number 8 become non-adjusting. Got it? Example number 9. Before reporting date, there was a proposal to sell machinery at rupees 8 lakh. Carrying amount was how much? 10 lakh. Actually sold at rupees 8 lakh. Batao. Adjusting, non-adjusting. Very good, excellent. Why it is non-adjusting? Proposal does not means that it is a sale. Correct na? Proposal. Very good, excellent. Means now you are applying your common sense. Non-adjusting na? The non-adjusting event. As similar question you have done at CA inter level also. Because ICA used to ask this question. Because of that reason you have said. So what you have done at CA inter level, that too you will say correctly only. Same question is asked in exam many times. It is a non-adjusting event. Correct? Understood? So there was no condition of sale. It was only a proposal. Proposal does not mean it is agreed. Correct? Yes, it is a non-adjusting event. But just write down. Refer Ind AS 105 means once we complete Ind AS 105 now, so there is one special point that will be discussed under Ind AS 105. Means such property, plant and equipment can be classified as held for sale. When it will be classified as held for sale, Ind AS 105 is attracted. Now what Ind AS 105 says will be discussed under Ind AS 105. This is totally new Ind AS. So I will once again take this example when I will do Ind AS 105. Understood? So I will try to link this example once again where Ind AS 105. Understood? I have written Ind AS 105. So when you are doing revision, you should refer what? Ind AS 105. You should relate this example with what? Ind AS 105. I hope you are understanding. Correct? Example number 10. This example number 10 is also one of the favorite question of CA Inter. But from my point of view, at CA Inter level, the solution given by ICA was not correct. But I used to also teach as per ICA solution at CA Inter level. But now, can I say we should understand conceptually? Now it is a time to understand conceptually, na? Are bola re? Now I will change the example. Agreed means there was an agreement to sell. Understood na? Agreement to sell at rupees 8 lakh. And registration completed after 31st March before Approval of financial statement. Agreement to sell machinery. So there was one machinery of rupees 10 lakh. Correct? And registration was completed before approval of financial statement. Adjusting, non-adjusting? Huh? Adjusting, non-adjusting? No, no. As per CA Inter, it is adjusting only. As per CA Inter. Correct? But from my point of view, this is not a question of Ind AS 10. From my point of view. Means as per CA Inter level, same question they used to ask under AS4, and we used to say it is an adjusting event because registration completed. So there was a condition adjusting on balance sheet date for which there was an evidence. What? There was evidence due to such event. Correct now. So we used to say it is an adjusting event. But just try to understand. Agreement to sale means control transfer. Yes, control transfer. Agreed now. If you have done some agreement is made, then registration is mere formality. Agreement, suppose this is land, don't think about machinery, think about land. Land agreement is done, there will be some sale agreement na. Sale agreement is executed, signed by both the parties. So control transferred or not? Control transferred, but can you see there are some formality you need to transfer the name from one person to another person. So registration is required from government purpose. Correct? So this registration is mere formality. This is mere formality now. So can you see we'll apply substance over form, and as per substance over form, if control transfer sale done, so can you say the sale journal entry will be done in this financial year or this financial year? Always in first means the current financial year. The sale journal entry will be done in current financial year. Control transferred. So of course can you see you should de-recognize the asset. De-recognize the asset. Correct. So normally what happens whenever you have done sale agreement, it means control transferred. If you have done sale agreement, control transferred or not? If control transferred, so it is not a question of now Ind AS 10. Means even though registration was not completed, suppose registration was completed after approval of financial statement, then also it is a sale entry. Are you getting what I am saying? Means suppose registration was not completed before approval of financial statement, then also control transfer. Control transfer, so it will be recognized as, it will de-recognize such asset or not? Will de-recognize such asset. To it is not a question of Ind AS 10. It is a question of Ind AS 16. It is a question of Ind AS 16. So just write down. Means if such question come, write down how to answer it. If control transferred, it will be adjusting event even if registration is not completed before approval of financial statement. And normally if question is silent, agreement, if the question is silent, control is transferred only. If question is silent, what you will assume? Control is transferred. But suppose question says control not transferred. Correct na? If control is not transferred, so how will understand control is transferred or not transferred? For that you need to go to Ind AS 115. Ind AS 115 has given some evidence, some indication to find out whether control has been transferred or not transferred. Ind AS 115. Ind AS 115 coming soon in later classes. Correct now? Means everything is linked. You can't become expert in one Ind AS right now. You need to link entire Ind AS with respective other Ind AS also. Correct? Are you getting what I am saying? If control is not transferred, can you say it will be what? Non-adjusting event. Even if what? even if registration is completed before what? Before approval. Before approval. If control is not transferred, can you de-recognize it? Can't de-recognize it. So this registration is mere formality. Means will not give importance to registration wala point. That is not at all important for passing journal entry for sale of machinery, correct? Or sale of land. Have you understood this point? So this answer I have given as per final level. As per CA inter level, we have not done this much discussion. Understood this point? Have you understood? I don't know whether this question will be asked or will not be asked, but I have given the best answer at CA from CA final level point. Example number 10 also we have understood. Means I have taken some examples of debtor. I have taken some example of provision. I have taken some example of inventory. I have taken some example of property, plant and equipment. Correct? More or less, I have just informed you that this Ind AS 10 is not only related to debtor, it is related to all types of event which occur before approval of financial statement. Now, I will take one good example. Let's see how you react. Example number 11. Everyone. Suppose on this date, a decision was taken to close one factory. Means now I am connecting Ind AS 10 with Ind AS 37 restructuring. Correct? On this date, detailed plan was made. Correct? Now before approval of financial statement, announcement was made. Understood? Announcement was made. If you can answer this, whether it is adjusting or non-adjusting, I will understand that you have understood everything. You have understood Ind AS 37 also, Ind AS 10 also. But adjusting, non-adjusting. Have you understood the question? Before 31st March, there was a detailed plan for restructuring. But the plan was announced after 31st March before approval of financial statement. Correct? So should we create provision on 31st March? Yes or no? Means adjusting, non-adjusting. How many are saying adjusting? How many are saying non-adjusting? Adjusting how many? Non-adjusting? Means doubt is there. Someone is saying adjusting, someone is saying non-adjusting. Till now you have not understood. Whenever doubt is there, means till now you have not understood. Just try to understand what I am saying. After taking so many examples, I have given one example of CA final level and you are not able to answer it. Means perfection nahi aaya. Till now perfection nahi aaya. Are you able to understand what I am saying? Perfection nahi aaya means what happened till now you have not revised Ind AS 37. Have you done the revision of Ind AS 37 last day? Last day whatever we have done, have you revised it before coming here? Where you have revised? In your home and in class? You have revised. Chalo. So what Ind AS 37 says that provision for restructuring will be recognized when there is a constructive obligation on which date? On reporting date. Correct? Constructive obligation will arise when two conditions are satisfied on which date? On 31st March. Whether both the condition was satisfied on 31st March. Whether both the condition was satisfied on 31st March. So it means there was no constructive obligation on 31st March. There was no condition only on 31st March. So condition arises after 31st March. Bolna yes or no? This is condition. Announcement is made means constructive obligation arises after 31st March, adjusting, non-adjusting, non-adjusting. Apply. Till you apply, you will not be able to react in exam. Whatever you have done, apply it. You will say suddenly adjusting, so it will become wrong ना. देखो जो दिखता है होता नहीं, जो होता है वो दिखता नहीं. Understood? Hindi? This I will translate. Whatever is visible, that is not correct, and whatever is correct, that is not visible. Understood what I am saying? So don't give answer prima facie by reading the question only. Think and apply it. Think and apply it. It is a non-adjusting event. Have you understood now? Just write down, if you want to write down the reason. If you want to write down the reason, write down. The constructive obligation arises after what? 31st March. Therefore, it is a non-adjusting event. This super expected question in exam. Can I say all other questions now you can read by your own and you can understand. If any doubt, you can ask me. Correct? But till now, India's 10 is not over because there are some special point that also I need to discuss. But let's see what we have done till now. What we have done? We have done types of event. Events are of two types: adjusting event and non-adjusting event. Adjusting event means which provide evidence of the condition existing on reporting date. Just delete further. This further has been deleted under Ind AS 10. Means AS4 used to say which provide further evidence, but now Ind AS 10 says which provide evidence. Which provide evidence of the condition existing on reporting date. This is the correct term. Okay. Non-adjusting which relate to condition arising after reporting date. Adjusting event will be adjusted to financial statement. It will be not adjusted. Disclosure of such event is required in financial statement, that is notes to account, if the amount is material. However, AS4 used to say disclosure will be given the report of approving authority. That was Bakwas point. Now whatever disclosure will be given where? In notes to account. Correct. When I say adjustment means adjusting entry. Adjusting entry means on 31st March. So it means all adjustment will be done on which date? On 31st March. On 31st March. Have you in your class 11-12 a CA foundation, you used to be given trial balance to prepare final account. Trial balance with what? Adjustment. This adjustment was nothing but this. All adjustment was this, adjusting entry. You remember closing stock? That was adjusting entry. Means or you, these all points you know from class 11 only. But the reference was not given for AS4 and Ind AS 10. Are you able to understand? All adjustment entry you have done or not? So these are adjustment entry. All adjustment entry are done on which date? On 31st March of the respective financial year. Understood? Examples. These examples all we have completed. Examples of adjusting event. The settlement of a court case after reporting period. I have taken this example. The bankruptcy of a customer that occurred after reporting period. This also I have taken example. The sale of inventory after reporting period may give an evidence about the NRB. This also I have taken example. The determination after reporting period of the amount of profit sharing or bonus payment. Just right, when you are paying bonus to employee, the bonus is based on profit. Profit will be known only once the financial statement are approved. So this also become adjusting event. This also become adjusting event. The discovery of fraud or error that show that financial statement are incorrect. Can I say when you do audit, so of course error will be identified. That error will be also rectified. That's also what? Adjusting event. Correct. But just write down. For this point number E, once again I will explain some point under Ind AS 8. Let us refer Ind AS 8. Means I will do some more discussion in which Ind AS? Ind AS 8. So better clarification will come when we will do Ind AS 8. Are you getting what I am saying? Yes, sir. Examples of non-adjusting event: decline in the market value of investment. And decline in the market price of investment is subsequent event. This is a condition arising after reporting date. Non-adjusting event. Major business combination. Any business combination. It does not provide any condition on. It does not provide any evidence of the condition existing on reporting date. Announcement of a plan to discontinue an operation. Already I have taken one example, point number C. Correct. Major purchase of asset. Any asset you are purchasing, that is a non-adjusting event. That cannot become adjusting event. Correct. Classification of non-current asset held for sale after reporting date. I have already said this point you will understand only when we will do what? Ind AS 105. Just write down refer Ind AS 105. I have given this reference now. So this point number E you will understand only when we do Ind AS 105. Correct. Changes in foreign exchange rate. So any subsequent changes in the foreign exchange rate is related to condition arising after reporting date, that should not be adjusted. Correct. Major litigation, any litigation after reporting date, litigation, any litigation, not settlement, and litigation, new litigation occur after reporting date, there was no condition on reporting date, it relate to condition arising after reporting date, therefore it become non-adjusting event. Can I say all examples I have taken into consideration? These all examples I have taken from Ind AS 10 only. So normally questions are asked from these examples only. All examples I have taken. Correct. Now there are some special point. How many special point? There are 3 special point. We'll do after break. Now, can we start once again, everyone? Before break, we have understood adjusting and non-adjusting event. Correct. Now let us take some special case. There are how many special case? Three special cases. Already I have said that special point require only application of concept whatever we have understood. However, out of these three special point, already two has been done where? In your CA enter. Correct. But let us first take the new special point. Long term borrowing, yeah, long term loan. Now when you have taken long term loan, can you say it is a non-current liability? Let me take one case study. Let us explain you the given example. This is 31st March. And suppose before 31st March you have taken a loan and it is a non-current liability. Suppose you have taken loan for how many years? 5 years. Correct? Now, as per the agreement with the bank, if there is any breach of contract means suppose the you are not able to satisfy the terms and condition of loan. There may be many terms and conditions. Suppose you are not able to satisfy the terms and conditions, so as per that agreement this loan will become loan payable on demand. Correct? Understood? So if there is a breach of contract, the loan will become loan payable on demand, and once it become payable on demand, then it become current liability. Why it will become current liability? For that we need to understand the definition of current liability. Now current liability definition is given under Ind AS 1, but you feel that you know the definition of current liability, but I know what you know. Correct? To detailed discussion about the definition of current liability and non-current liability will be done under Ind AS 1. Right now only we will understand that if loan become payable on demand, then as per definition given under Ind AS 1, it will be classified as what? Current liability. Correct? Understood what I am saying? Let us assume on or before 31st March there was some breach of contract. Understood? And because there was a breach of contract, can you see this non-current liability was reclassified to what? Current liability. I hope you have understood this point. So on or before 31st March, the long-term loan become current liability because it become loan payable on demand. Why it become current liability? Because now it become loan payable on demand. Understood? Now, before approval of financial statement, bank agreed not to demand payment. Even though there is a breach. Quite possible na? Bolo yes or no? The bank agreed not to demand payment. Now this event will be adjusting event or non-adjusting event? Apply your common sense. Have you understood? Means if you are saying bank agreed not to demand payment, if it is adjusting, if you are saying it is an adjusting, correct now? So current liability will become non-current liability. And if you are saying non-adjusting, so current liability will remain current liability. Understood? So what do you think? It will be adjusting or non-adjusting event? Hello? Once again. On 31st March, on or before 31st March, non-current liability become loan payable on demand due to some breach of contract. But after 31st March and before approval of financial statement, bank agreed that they will not demand payment. They will not demand payment even though there is a breach of contract. So they have done agreement. So it is an adjusting or non-adjusting? Means you are saying it should be classified as current or non-current in balance sheet. So loud, Ray. Be confident about your answer. Whatever you are saying, even though you are saying wrong answer, be confident. Current or non-current? How many are saying non-current? How many are saying current? You are non-current, current. How many are saying non-current? How many are saying current? So someone is saying current, someone is saying non-current. So can you see, if you are saying adjusting, it means it is non-current. If you are saying non-adjusting, it means it is current liability. Correct. Now, what India's 10 says, it will be an adjusting event. What India's 10 says, it will be an adjusting event. Correct. But what IS 10? IS 10 means what? International Accounting Standard 10 says it is a non-adjusting event. Means both answers are correct. So those who are international, they have said current liability. Those who are Indian, they have said what? Non-current liability. But in exam, your answer should be what? By giving reference of Ind AS 10, not as per IS 10. Huh? So from exam point, what is correct? This is exam, na? Exam point, this is correct. You can't apply IS 10 in exam. Okay? So can this become a carve out? This become a carve out? Are bolna re? Remember carve out. This become carve out. Correct. Understood. So of course now you'll find some what is the logic of this difference. Now just try to understand. Internationally bank is very strict. Internationally bank is very strict. Are you getting what I am saying? So what IFRS, when I say IFRS, IFRS will include IAS also. Huh? So what IFRS says, the bank is very strict. So this is very rare case. It's very rare case. And normally it will be, once it is classified as current liability, it should remain current liability only. So this is as per the condition prevailing in international market. But in India, can I say bank is not so much strict, and bank normally waive such type of breach. Normally. And can I say bank agree that they will not demand payment to, of course it is no more current liability, it is non-current liability. So as per Indian accounting standard, it is also correct. Bank is not strict and bank normally waive such type of breach. Means normally bank will not demand payment. Correct? Are you getting what I am saying? So as per Indian economic condition, what they have decided that this will be an adjusting event and it will not be shown as current liability, it will be shown as non-current liability. Understood? So your answer in exam should be what? As per Ind AS 10 means it is a adjusting event and it will be a non-current liability. Understood? Have you understood? But have you understood carve out? Carve out understood? This carve out is not a part of syllabus. Then also we'll do it because only 5% difference. If you have done it means you have understood IFRS also. You have understood IFRS also. Chalega? Bolo yes or no? Now let us read. Whenever there is a breach of material provision, means Ind AS 10 has given only breach of what? Material provision. Means if there is a breach of immaterial provision, ignore it. Means only breach of material provision. Correct now? Means there may be some minor defect. Can I say for minor defect, bank will never demand payment? Minor defect means suppose submission of document, this become minor defect. Minor defect. So normally the client will submit. They may take some time. These are minor defect. So minor defect in their tenses, ignore it. Correct. So only we should think about what? Material defect, major defect. Correct. So whenever there is a breach of material provision in case of long-term borrowing on or before reporting date, with the effect that such loan become payable on demand, that is current liability, means it become payable on demand before, on or before 31st March. It become payable on demand on or before 31st March. Understood what I am saying? Such loan will be classified as non-current liability. Means which event? Adjusting or non-adjusting? It become adjusting event now. Current liability will be classified as non-current liability, means adjusting event. If the lender, means bank, agree not to demand payable before approval of financial statement for issue. Understood? Have you understood? Correct. To explain it, let me discuss this flowchart. Long-term borrowing, breach of contract on or before reporting date. If minor default, ignore it. it will be classified as always what? Non-current liability. So for any minor defect, ignore it. Means it will never become loan payable in demand. It will be non-current liability only. For major defect, if the lender agreed not to demand before approval of account, then it is a non-current liability. But in other cases means if bank has not agreed, then it will be current liability only. So it will be current liability. Understood? Understood? Correct. Carve out. As per IS 10, event after reporting date. IS 10 means International Accounting Standard. I means international. Correct. Rectification of any breach after the end of reporting period is always a non-adjusting event. Non-adjusting event. Understood? This is as per IS 10. Got it? Chalega? Simple. Yes, sir. Now going concern. This going concern already you have done where? At CA Inter. What you have done at CA Inter? Let us understand. Correct. Going concern. You know about going concern. I am not explaining what is going concern. Going concern means there is no intention to liquidate. There is no intention to cease your trading. There is no intention to close your business. Correct? Means we are a going concern. And whenever we are going concern, our financial statement will be prepared as per going concern only. Correct. Now, just try to understand. Suppose this is 31st March and this is date of approval. And fire occurred. And huge losses. Correct? Understood? My question to you are adjusting, non-adjusting? So huge losses means it become adjusting. But whether there was any condition of fire? So your answer was not correct, na? Just try to understand. Don't give answer prima facie. This mistake you do in exam also. Maja aa gaya. And then you realize that you have done mistake when the result will come. Correct na? Most of the time, students score less than 20% marks from their expectations. Means they will expect 80 marks, they will score what? 60 marks. If they are expecting 60 marks, they will score 40 marks. 20 marks difference हो जाता है because of this minor mistake. Normally students fail not because of conceptual mistake. Students fail because of small mistakes. I have seen that if you know the concept, you write down. Means you will never do conceptual mistake. If you know, you write down, nah. But you will do calculation mistake. Taking wrong information from the question, that mistake. This mistake will affect your life. And that can be dangerous mistake. Are you getting what I am saying? So when you read, be relaxed. Take your time. Analyze and write now. Are you getting what I am saying? Now there can be two situations. If GC is valid, GC means if GC is invalid. Correct. If GC is valid, then it is a non-adjusting event. Correct. If GC is invalid, it become what? Adjusting event. This same point you have done where? In CA Inter AS4. Correct. Understood. So can you see if GC is valid, then your financial statement will be prepared as per going concern only. Means no adjustment is required in your financial statement, only the amount of loss required disclosure if the amount of loss is material. But if GC become invalid, because GC become invalid in this financial year, just try to understand. Suppose you have reported a profit of 1000 crore in this financial year, but it affect your going concern. This event affect your going concern means in future year you might not earn such much profit. Therefore, what Ind AS 10 says that you should inform to the user that now you become non-going concern. And this financial statement will be also prepared as per what? Non-going concern. Correct? Means can I say this financial statement will be now, this financial statement will be now restated as per non-going concern. The financial statement will be now prepared as per non-going concern. Understood? It means that is by making fundamental changes in the basis of accounting. Fundamental changes in the basis of accounting. Means can I say your accounting basis should be changed now? When I am saying financial statement are prepared as per going concern, means you are applying all Ind AS. But when I am saying financial statement are prepared based on non-going concern, means now you are not applying any Ind AS. You need to change your basis of accounting. So what need to be changed? It means in this case, all asset and liabilities are measured at what? Are measured at realizable value. A realizable value. Once you are saying that now we are preparing a financial statement based on non-going concern, it means you need to prepare, you need to measure all asset and liability at realizable value. Even though realizable value is more than what? Carrying amount. Even though realizable value is more than carrying amount. Understood? Have you understood this point? Now, just try to understand. AS4 has said only adjustment is required. But Ind AS 10 has given more clarification by giving a special point that we should make a fundamental change in the basis of accounting. So practically there was no difference, but theoretically there is a difference between AS4 and Ind AS 10. I hope you have understood. Correct? Understood? Chalega. Let us come. What they want to say. An entity shall not prepare financial statement as per going concern if intend to liquidate. There is an intention to liquidate. Till now not liquidated. There is an intention to liquidate. If liquidated, then the books of account is permanently closed now. There is an intention to liquidate or cease trading, or there is no realistic alternative but to liquidate it. Means there is no other option but we need to liquidate. For example, just try to understand कि suppose government announce restriction on plastic industries. So even though they are good profit making entity, but there is no other option, but there is only one option to liquidate. So it can be also one case. So if that is the case, then also now their financial statement will be prepared as per non-going concern. If going concern assumption is not appropriate, that is become invalid after reporting date. Ind AS 10 require fundamental changes in the basis of accounting rather than adjustment to financial statement. Means not only adjustment to financial statement, we should make fundamental changes in the basis of accounting. It means all asset and liabilities will be recognized at measure at realizable value. Correct? Understood? So Ind AS 10 only this says this much. What Ind AS 1 says that Ind AS 1 require following disclosure if financial statement are not prepared on going concern. So Ind AS 1 says that whenever financial statement are not prepared as per going concern, following disclosures are required. So disclosures are required as per Ind AS 1. What this is? Fact why it become non-going concern. Basis of preparing financial statement, what basis you have taken for preparing financial statement, and reason why entity is not regarded as going concern. Understood? Have you understood? Yes, sir. This already I have explained. Even after reporting date, if going concern remain valid, it is a non-adjusting event. Disclosure required if the amount is material. If going concern is not valid, adjusting event, fundamental changes in the basis of account is required. Disclosure required as per Ind AS 1. Understood? Correct. Simple. Now, if suppose questions come like this and question is silent, whether GC is valid or GC is invalid, I will say give both answer. If it is valid, then what need to be done? If it is invalid, then what need to be done? Understood? That become best answer. Correct answer and best answer difference, you understood? Correct? Yes, sir. I think no clarification required in this. Chalega? Follow. Now, next point. Proposed dividend. I think proposed dividend, nothing to explain. You all know that proposed dividend will never be recognized as a liability because it is a non-adjusting event. So, the dividend which is proposed before approval of financial statement, yes, it is only a proposal. It is not yet approved by shareholders. The proposal does not mean it is a liability. Now, there is no obligation to pay. There is no obligation to pay. If there is no obligation to pay, it is not a liability. Correct? So what Ind AS 10 says that if an entity declare dividend to the holder of equity instrument after reporting date, if the entity declare dividend to the holder of equity instrument after reporting date, the entity shall not recognize it as a liability at the end of reporting period. Means proposed dividend will never be recognized as liability in the balance sheet. We have never recognized proposed dividend as a liability in our balance sheet. Understood? Yes, sir. However, such dividend are disclosed in notes to account as per the requirement of Ind AS 1. Ind AS 1 says that any dividend which has been declared or proposed after balance sheet date but before approval of financial statement should be disclosed in notes to account. It is also required as per the requirement of Schedule 3 also. Correct? Understood? Can I ask one question to understand whether you have understood? My question to you all, this proposed dividend will be disclosed. So whether this proposed dividend is a contingent liability. Ind AS 1 says proposed dividend will be disclosed. So whether this proposed dividend is a contingent liability. Apply Ind AS 37. Don't think much. We have done Ind AS 37. You are supposed to apply Ind AS 37 now. Whether this proposed dividend is contingent liability. Yes or no? Why it is no? Because there is no obligation. There is no obligation only. Present obligation will come if there is an obligation, but there is no obligation only. If there is no obligation, Ind AS 37 is not applicable. So can I say, only for your understanding, sometimes doubt will come, this proposed dividend is not a contingent liability. Only for your understanding. Chalega? And therefore disclosure was required as per Ind AS 1, not as per Ind AS 37. Got it? Correct. Chalega? Coming to disclosure requirement. Disclosure requirement A. Date of approval of financial statement. What is the date of approval need to be given? Who has given approval? The name of the person, name of the director who has given approval, that need to be mentioned. Entity's owner or other who has a power to amend financial statement after issue. I have said this point. There may be some owner, there may be some officer who has a power to amend financial statement after approval of board of directors. Remember? So if such clause is there, the name of that person is also required. Correct? So entities owner or other who have power to amend financial statement after issue, that name need to be disclosed. Updating disclosure about condition existing on reporting date for adjusting event means if there is any updation required for adjusting event, then also it require disclosure. Non-adjusting even if material, non-adjusting even if material, following disclosures are required. Nature event, estimate of financial effect. If can't be estimated, fact must be disclosed. Simple. Understood? This point number A, this was silent in AS4. Means AS4 was silent regarding point number A. As per AS4, date of approval, who has given approval, entity's owner, this point was not given in AS4. Correct? Understood? Difference. In AS10, AS4. Correct? Non-adjusting event. Disclosure in financial statement. But what AS4 used to say, disclosure in the report of approving authority. Already I have said. Correct? Going concern. Require a fundamental changes in the basis of accounting if going concern become invalid. Correct? However, it require only adjustment to assets and liability. This is only theoretical difference. Practically, there was no difference. Theoretical difference. But we are here to understand all the difference. Correct? Then disclosure, of course, it is less disclosure because I said point number A was not given in AS4. Correct? Then distribution of non-cash asset to the owner. This is one special point. However, this is actually not, you can delete from difference, but yes, there is some point which you need to discuss about distribution of non-cash asset to the owner. Means with this, Ind AS 10 is over. Ind AS 10 is over, but there is one special point which we need to understand. You can see there is the next point, distribution of non-cash asset to the owner. Distribution of non-cash asset to the owner. Understood? When I say owner means what? Holder of equity instrument. When I say owner means holder of equity instrument. You can see I have not said equity shares. I have said holder of equity instrument. To equity instrument is a wider term. Equity share is an example of what? Equity instrument. So what is the meaning of equity instrument that we need to understand? Correct. So that will be understand when we'll do Ind AS 32. Ind AS 32. What is the meaning of holder of equity instrument? The definition is given where? Ind AS 32. But right now, you know equity shares. So we will only focus on equity shares. Correct? So distribution of non-cash asset to equity shareholders. अभी ठीक है? अरे बोलना रे. Distribution of non-cash asset to equity shareholder. Normally when I say distribution of dividend, dividend is normally in cash. अरे बोलना रे. When I say distribution of dividend, dividend is normally in cash. So whenever there is a cash dividend, then we know what need to be done. But if suppose non-cash asset is distributed, can we distribute? Yes, we can distribute. You can distribute anything to the owner. So if there is a distribution of non-cash asset, Ind AS was silent regarding such accounting treatment. So whenever accounting treatment is not given in Ind AS, so there will be some doubt in the industry. Whenever there is a doubt, so can I say some announcement will be done? Some announcement will be done. Normally what happens, I will just inform you because I need to give you some extra knowledge also. So samjho. This is IAS or what? IFRS. Means if IAS and IFRS is silent, so similarly Ind AS will be also silent. बोलना रे. Because Ind AS is nothing but copy paste of what? IAS or IFRS, there are only some difference. Are you getting what I am saying? Now, if there is some point for which IAS or IFRS is silent, so there is one committee known as IFRIC, International Financial Reporting Interpretation Committee. IFRIC, you understood? IFRIC. You want to write down full form? International Financial Reporting Interpretation Committee. Before IFRIC, there was what? SIC, Standard Interpretation Committee. Means for IS it was SIC, for IFRS it become IFRIC. So they will give some interpretation. They will provide interpretation. Means there is what IFRIC 1, IFRIC 2 like this. IFRIC 1, IFRIC 2, IFRIC 3. Whenever what is silent, IFRS is silent. So there are many IFRIC. Now when we convert IFRS to Ind AS, so can I say this IFRIC was added to Ind AS as an appendix. Understand what I am saying? This IFRIC was added to Ind AS as appendix. So there are many appendix to related Ind AS. Understood? Appendix A, Appendix B, Appendix is like this. So Ind AS have some appendix. Appendix is nothing but interpretation. Whenever Ind AS is silent regarding some point, correct? So now I hope you'll understand this point. This has been given in what? Appendix A to Ind AS 10. Have you understood what I am saying? Correct. What is the topic? Topic is what? Distribution of non-cash asset to the owner. And this is as per Ind AS 10 or as per Appendix A to Ind AS 10. So you can't write in exam as per Ind AS 10. It is as per Appendix A to Ind AS 10. Topic you understood? Topic you understood? And why we are doing? Have you understood? Correct. Now just try to understand. Right now we are doing, the topic is what? Distribution of non-cash asset to owner. Correct? It means just try to the topic you have understood. Let me explain what they want to say. Can you see, if there is one entity, there is second party owner, entity owner, means this owner is nothing but equity shareholders. Correct? Now there are three type of transaction between these two parties. First is known as contribution from owner. Understood? Contribution from owner. Contribution. Who will contribute? Who will contribute? Owner to whom? Entity. Arrow you understood? Second is known as what? Distribution to owner. Who will distribute? Entity. To whom? Owner. And third is what? Other transactions. Other transaction. For example, loan or any sale or purchase, any other transaction between these two persons. Just try to understand. When I am saying other transaction, so it is reciprocal transaction. When we say reciprocal transaction, it means what? It is always two-way. Means one party is receiving, so one party is giving. Means when I am saying loan, so loan will become receivable and payable in both books. It become a reciprocal transactions. It is two-way transaction. Correct? But can I say this is what? One-way transaction. This is known as what? Non-reciprocal transactions. I hope you have understood. Because when I say contribution from owner to you receive, now nothing is payable. Now you receive loan amount, so some amount is payable na. It become reciprocal. Not able to understand. Means if suppose equity shareholders has contributed some amount, I have received any amount is payable, no amount is payable, it become what? Non-reciprocal. If I have distribute dividend, so shareholder receive dividend, whether that is 1 second payable, no, it become non-reciprocal. But loan transaction, sale or purchase transaction become what? Reciprocal transaction. Okay, this is covered in respective Ind AS. Respective Ind AS means as per the nature of transaction. As per the nature of transaction. Understood? Are you getting? Suppose you purchase inventory from owner. So inventory Ind AS 2 will be applicable. Bolna yes or no? Are you getting what I am saying? Correct. Respective Ind AS will be applicable. For this contribution, this contribution can be in cash or non-cash? Or non-cash? Are you getting what I am saying? But normally means I will say normally contribution from owner is in cash. Normally. Are you getting what I am saying? For these, Ind AS 32 is applicable. Ind AS 32 is applicable. Correct. Now, distribution can be also in cash and non-cash. Now, Ind AS 32 only has given accounting treatment for cash distribution. Means Ind AS 2 was silent about what? Distribution of non-cash asset to the owner. Therefore, doubt came. And for this non-cash distribution, what is applicable now? Appendix A to Ind AS 10. I hope you are understanding. I hope you have understood. Have you understood what I am saying? Is I need to give you the entire points now, then only you can relate to what actually we are doing. So now I hope you have understood that we are discussing only this point. Distribution of non-cash asset to the owner. Correct? Now my question to you all, when I say dividend, it can be in cash, it can be in non-cash. Non-cash, it may be in any form of asset. Correct now? Now if it is in cash, what journal entry entity will do? Means you have done journal entry for dividend declaration in your CA enter. What journal entry you have done for dividend? Dividend declared. What journal entry? Bolo. PL account or PL appropriation account? PL account or PL appropriation account? Why you said PL account? You know about PL and PL appropriation, na? Are bolna re. Anyone who don't know PL appropriation account? Of course, that's after CA enter, you know PL appropriation account. So of course it is PL appropriation account debit dividend payable, then dividend payable to cash. Correct? Means now PL appropriation account will be known as retained earning. Is now will not use which account? Will not use which account? PL appropriation account. Will use which account? Retained earning. Means all distribution will be done through which account? Retained earning. Means net profit will be transferred retained earning, and from there we will do distribution. Retained earning account debit to, if I can say dividend payable, or directly we can say cash, or better you write on dividend payable. Correct now? To dividend payable, and then second journal entry is what? Dividend payable account debit to cash or bank. Understood? So there was no doubt in this. This is the understood point, na? Doubt come where? When the distribution of dividend was in the form of non-cash. My question to you all, even though you are distributing non-cash asset, journal entry will be what? Journal entry will remain same, na? Means journal entry will remain same. Retained earning account debit to dividend payable only. बोलो yes or no? Correct. But doubt came by what amount? This was a doubt, question mark. By what amount? Whether the whether we'll do the journal entry with carrying amount of asset or with the fair value of asset, this doubt came. Understood? And because of that reason, some clarification was required. And that clarification was given in the form of Appendix A to Ind AS 10. Have you understood this point? Have you understood what we are discussing? Let me take one example. You are CA, you can apply your common sense and you can give me what amount? To apply your common sense, let me take one question. Till now, no question has been given from this topic in ICA study material. No question has been taken. So I have created one question. Whenever there is no question, so I will only create one question. I can also delete this topic, but I will not delete. What you want me to delete this topic? Correct. So better do it. Let me take one question. Whenever I am creating one question, it means there is no question in ICI study material. Correct. So from exam point of view, you can ignore, because normally what happened, what I have seen, the ICI will ask only those questions whatever topic has been covered with question in ICI study material. And if they want to ask a question on this, now first they will give you this question in RTP or MTP. Means first they will warn you, and then they will what? Ask you. This is a trend. So can a simple exam na? They are giving question, then they are asking. New question, very rare situation. Very rare situation. Means 95% question will be as it is, whatever is given in ICI study material, RTP, MTP. Only 5% question they will modify it. Simple exam, complicated exam. अरे बोल रे simple ना, the simple life is simple. Correct. What they have given? Apply your common sense. Entity proposed distribution of one pen to all shareholders on 15 Jan 2017. Proposal was done on 15 Jan. Entity declared and approved the dividend for distribution of one pen to all shareholders on 15 Feb. When the approval came? 15 Feb. It was actually distributed on AGM which was held on 15 5. But can I say between 15 Feb and 15 5 there is reporting date 31st March. Correct. Fair value of each pen on 15 Jan means on proposed date how much? How much? 500. On 15 Feb on approval date 500. On 31st March reporting date how much? 520. 15 5 on distribution date how much? 515. Cost price of each pen is 400. Let us assume this pen is inventory. Let us assume this pen are inventory for the entity. Let us assume. These are our assumption. Correct? Have you understood what I am saying? Number of shareholders is how much? 1000. Total number of shareholders is 1000. Correct? Let us come apply your common sense now. What journal entry will do on 15 Jan? There is no need to read the answer. Answer is given. Don't read. Once you read, interest lost. Then you'll think, yes, it is very easy. You can do. Don't read. Try to answer by your own. 15 Jan proposal date. What journal entry? Bola? 15 Jan proposal date. They have proposed distribution of one pen to all shareholders. What journal entry? Proposal. Will you pass any journal entry for proposed dividend? Right now we have done no journal entry for proposed dividend. So even though it is non-cash, whether you will pass any journal entry for proposal, it is not yet approved only. So there is no liability na. There is no obligation to distribute. There is no obligation to distribute. No journal entry. Correct. Now on 15 Feb it was approved. So on approval date, what journal entry? Retained earning account debit to? Retained earning account debit to? Dividend payable. Dividend payable now. With what value? Amount batao. Apply your common sense. 1000 into what? 500 or 400? Cost price or fair value? Means you will take cost price or fair value? No doubt game. Na? Cost price or fair value? Cost price or fair value? Apply your common sense. Can I say whenever you are distributing, you will distribute at current fair value now. What is the worth of the pen today? You might have purchased some year before, but when you're distributing, you will distribute as per current fair value. It will be what? 500. Same thing is given where? In appendix A. What journal entry they have given? Retain earning to dividend payable 500, 1000 into 1 into 500. 1 means 1 pen to each shareholder. Correct. Now on 31st March, the fair value become 520. Normally, the fair value will not increase or decrease for pen. This is only a example to illustrate entire points of appendix A. Means if there is some changes in fair value, some adjustment is required. Yes or no? What adjustment you will do? Batao. 500 become 520. You will increase the liability. So what journal entry you will do? Retain earning to dividend payable. 500 into 20. 500 into 20 means how much? How much? 1 lakh. That's sorry. Not 500. 1000. 1000 into 20 how much? 20,000. Correct? My mistake. So retain earning to dividend payable 1000 into 20, 20,000. Simple. Now on distribution date, once again it become 515. On actual distribution date it become 515. Once again reassessment is required. So what journal entry will do? Dividend payable to retain earning. You will decrease dividend payable by 5 rupees. Means 1000 into 5, 5000. Correct? That only it has been done. Dividend payable to retain earning 5000. This much you understood. Can I say, even though you forgot this concept, you can apply your common sense in exam. If you know basic accounting if you know the last point, if you can answer the last point, it means jabardast, means maja aayega. Everyone just try to understand. On distribution date on 15/5, what journal entry will do? Dividend payable now the carrying amount is 5 lakh 15,000 and we'll do 2 inventory will be de-recognized, means pen. Can I say pen will be de-recognized, that is carrying amount means at cost price. So 1000 into what? 400, that is what? 4 lakh. Bolo yes or no? Have you understood this journal entry? Understood? Bolna rahi. So carrying amount of dividend payable was 5 lakh 15,000, carrying amount of pen was 4 lakh. Difference will come. How much difference coming? 1 lakh 15,000. My question to you all, this difference should be transferred to PL or retain earning. Everyone, listen. Means doubt will come about this point. When I am saying PL, so it is in SOPL. When I am saying retain earning, directly it will be adjusted in balance sheet. Retain earning. Yes or no? So there is a difference. When I am saying PL, any income and expense will be transferred to SOPL. If it is income expense, it will be transferred to SOPL. And if it is not an income, not an expense, then directly adjusted to equity. Other equity means apart from equity share capital. Apart from equity share capital means reserve and surplus are other equity. Reserve and surplus are other equity. I hope you are understanding. So my question to you all, this is whatever difference coming, whether it is an income or expense. When I am saying income will include gain. When I am saying expense will include loss. So my question to you, whether this difference will be transferred to PL or retain earning. Means you are saying it is not an income or expense. Means if it is credit means income, if it is debit means expense. Retain earning or SOPL? Everyone saying retain earning? No, it will be PL. It will be PL. Just try. Just don't worry. Basic. So syllabus is left. Dire, you will become expert in all the points. Just try to understand. Suppose you would have distributed cash. So you would have sold inventory at rupees 5 lakh 15,000 only. So sale means sale will come where? In SOPL only, na? So how much sale? 5 lakh 15,000. How much cost? 4 lakh. the difference will come how much? 1,15,000. It is transferred to PL only now. Suppose you have distributed cash. You will first sell inventory, realize cash, and then distribute. So when you have sold inventory, the increase in the value of asset is transferred where? PL only. Means it is actually income or gain. It means now we need to understand the meaning of income or expense. Till we understand the meaning of income and expense, we will not be able to understand why it is income, why it is an expense, why it is not an income, why it is not an expense. Are bolna yes or no? And till now we have not done the meaning of income and expense. Are you able to follow me? Means I need to now give the meaning of income or expense. Have you done the meaning of income and expense till now anywhere? What is the meaning of income? Means you know, increase in the value of asset, 4 lakh become 5 lakh 15,000. Is it income or not? Income will be transferred where? PL. So means more or less correct definition. More or less correct. Increase means any increase in the asset or decrease in the liability. More or less. I mean, it is not full definition, huh? But you know, definition of income, I can say in this way. If it is meeting the definition, 4 lakh become 5 lakh 15,000. Increase in the value of asset or not? Increase in the value of asset is income. Income will be transferred to what? PL. And therefore, Ind AS 10 means Appendix A to Ind AS 10 also say that this difference will be transferred to what? PL. Whether either as a gain or loss. Gain on distribution or loss on distribution. Understood? Have you understood? I'll come to definition of income, but I hope with this, whatever he has said, you have understood the meaning of income. Correct? Have you understood? Correct? So let me complete this point first. You can see dividend payable to inventory and the difference has been transferred to what? PL account. Correct? So just write down one note. Any difference, just write down one note. Any difference in the last journal entry. Just write down one note. Any difference in the last journal entry. Just write down one note. Any difference in the last journal entry. Any difference in the last journal entry is gain or loss on distribution of asset. Is gain or loss on distribution of asset. Is gain or loss on distribution of asset, which will be recognized where? Which will be recognized where? In PL. Which will be recognized in PL. Understood? This journal entry is very simple once you have understood. Correct? Let me come to the concept what they have said. Point number 1. Non-applicability of Appendix A to Ind AS 10. Means Appendix A to Ind AS 10 is not applicable to what? Correct? First point. It is not applicable for accounting in the books of shareholders who receive such distribution. Means it is applicable only in the books of entity who distribute such non-cash asset. It is not applicable in the books of shareholders who receive such distribution. First point is okay. Second point. It is not applicable to distribution of non-cash asset to the entity which is ultimately controlled by same party before and after distribution. Have you understood this point? Have you understood? Once again read. It is not applicable to distribution of non-cash asset to the entity which is ultimately controlled by same party before and after distribution. Have you understood? So yes or no? No, you have not understood. Write down. Refer what? Yes sir means what? English you have understood. But I can't explain right now because it will be detailed discussed under Ind AS 103. Refer Ind AS 10. Correct? So this point automatically I will teach you when I will do Ind AS 103. Got it? Applicability, it applies to the following type of non-reciprocal transaction. Now I hope you have understood what is the meaning of non-reciprocal transaction. Between whom? Entity owner. Distribution of what? Non-cash asset. Distribution that gives an owner an option of non-cash asset or cash alternative. Means an option has been given. Either you take pen or you take some cash of what? Cash worth rupees the value of pen. So if the option has been given, then also what is applicable? Appendix A to Ind AS 10 is applicable. Journal entry, I hope you have understood. Whatever we have done, that is only written. You can read. With this, Ind AS 10, Appendix A to Ind AS 10 is over. All the question of Ind AS 10 now you can do by your own. Already I have taken many examples. Whatever examples I have taken, 11, 12 examples. Whatever examples I have taken, that is a part of ICI study material question only. Means example 10 to 12 examples I have taken. So means 12 questions I have done in class. Then some special case also I have done. If you have understood all these points, you can now do balanced questions. Correct? So Ind AS 37 completed, Ind AS 10 completed. Don't worry, income definition I'll come back again in some other areas. But because he has given the definition, okay. Understood? Correct? For today, this much only. Thank you very much. We'll meet tomorrow. Till then, bye bye. Take care. Enjoy your remaining day.